Well, the stock market's raging and the traders all shout. There's one man we're watching, his moves full of clout. Some call him evil, some call him proud, but I just smile and call him Daddy Powell. Will Jerome Powell nuke the market again? With the flick of his wrist, make fortunes disappear in the wind. Wall Street's a jungle, the lions on the prowl, but the king of the jungle is old Daddy Powell. Oh, Daddy Powell, oh, Daddy Powell. Every single time it's like a fucking roller coaster ride. It's gonna be a crazy week, so hold on tight. Oh, Daddy Powell, don't bring me down. The numbers are flying, red ink and green. For some it's a nightmare, for others a dream. Degens are crying, theories disavowed, all bending the knee to mighty Daddy Powell. Oh, Daddy Powell, oh, Daddy Powell. Every single time it's like a fucking roller coaster ride. It's gonna be a crazy week, so hold on tight. Oh, Daddy Powell, don't bring me down. The bulls and the bears are locked in a fight. Who knows if we'll feast or starve come the night? With a glance at the screen, I let her howl when I see that old motherfucker, old Daddy Powell. Oh, Daddy Powell, oh, Daddy Powell. Every single time it's like a fucking roller coaster ride. It's gonna be a crazy week, so hold on tight. Oh, Daddy Powell, don't bring me down.
Oh, brother, oh, brother, oh, brother.
Buenos nachos, mi amigos. It is a beautiful Tuesday, February the 11th, and man, oh man, is there a wee bit of red in the market this morning. I'm a little bit elated because not only am I swinging puts that are finally going to pay, but I'm the luckiest trader ever. I truly believe, not skillful. I'm not saying that. I would never say I'm the most skillful trader ever, but I'm the best trader ever because I'm the most lucky trader. You guys have to understand, you are not watching the show of a degenerate trader who knows what he's talking about, who understands the math of the matrix. You're watching the show of like just truly pure luck. Day in and day out, are there better traders than me? Without a doubt. But there are not luckier traders than me. For those of you who have been paying attention to what's been going on with really the SIMDA funded accounts, you know that I took my second loss ever in the life of these accounts yesterday. It was a brutal loss around 3.8K. And historically, as I've been trading these day in and day out, you know that I have very lucky recoveries. It seems as if yesterday my luck ran out, and it just happens. It happens at a certain point, you're just going to run out of luck. And then I realized maybe not so much. even though I had a locked-in loss of $3.8 thousand per account, which is in the realm of $77,000 hit yesterday. I got the update from Apex that they had rhythmic data issues, so anyone who suffered a loss, it actually got nulled out. Folks, I can't explain it. I can't explain it whatsoever. I can't explain it at all, but no matter what I do, I cannot miss. It must be the most difficult thing ever to be a hater of the Goonie community, of the Matt Kohrs show, of what we have going on here. Because I just, even when I lose, amazing things are like, nah, never mind. we're just going to go to where we were. Like, dude, it's incredible. It truly, truly is fascinating that I seemingly have more than 9 lucky lives. I really do. Lady luck, there must be some sort of, I guess, angel on my shoulder here. Literally just, I guess, impacting the entire system and saying, nope, we're not going to allow him to lose. Like, how insane is that? And just to show you guys, here, how do I switch this over? I mean, this is how ridiculous it is. Sorry, I was looking at some pre-market stuff, but let me just show you what I'm talking about. So yesterday, I broke all my rules. Horrible price action. This was posted around 12:44, so I knew I should be done. Pretty much scratch on the day, and I was like, all right, just end it. Then later on in the day, I broke all my rules. This was posted right after market closed. As you could see, 3.7, 3.8K loss on pretty much every account. Like I said, this was right at market close yesterday. Every account is between $90,000 and $91,000. But then here's the state of my accounts right now. 94, 94, 94, 94. Basically, this entire loss completely wiped away. The second time ever in the history of these accounts that I've had a losing day, and I just purely hit gold with the fact that they had data issues. That's crazy. Matt, you know how to piss me off, right? Tom from MySpace. I'm sorry, Tom. I don't want to be so offensive. I just can't get over the fact that some trader could literally be this like, check out this guy. Can you guys see this? Loser, cocky motherfucker, haha. And this was before I knew anything. This was last night. Can't wait to come back to this in the future. The future's already here. Look at this. This guy chirping me. Can't wait to come back to this in the future. Didn't even have to wait long. Did not have to wait long at all. Truly wild. Folks, that was how my night went. And obviously, I'm very ecstatic that I caught another lucky break. Right now, as I alluded to, I'm already swinging some put positions on the SPY, the Qs, and Tesla. So right now, you can see by this trend of things that I'm feeling pretty good, feeling pretty lucky. So excited for market open. But that's going to lead us to a very, very exciting day, because today, not only do we have some volatility, some excitement in the overall stock market, but we have Daddy Powell, the chairman of the Fed, speaking today, testifying today in front of the Senate, and that's going down at 10 a.m. So 30 minutes into the trading day, he will start to testify once again in front of the Senate, and then he's testifying again tomorrow in front of the House. So 10 a.m. today, 10 a.m. tomorrow. And as you're about to see, we also have an inflation report coming out early tomorrow. So there is a lot going down. So what I want to do today is prep everyone up for not only the rest of the day, but I want to take a deeper dive into my personal morning prep, where you guys are like, oh, how are you picking out the resistance and the support levels so accurately? I want to kind of do like a tell-all of how I figure that all out. So I hope that sounds good. We're going to do some morning prep, and I want to, instead of just giving the numbers, I want to actually have a more full-fledged conversation of how I'm coming up with the exact levels that I particularly care about. But before we do that, shout out to Rumble and Rumble Premium for being a partner of today's show. If you use that code Kohrs10, you're going to get $10 off the annual subscription. So you're going to get ad breaks. You're going to get a break from the ad breaks. You're going to get access to Rumble Premium itself that has exclusive content from creators such as Steven Crowder, Dr. Disrespect. You're going to get a verified badge and other benefits. And from what I'm hearing in the grapevine, the benefits are going to get better and better and better. And beyond that, you're just supporting a company that has, in my opinion, been leading the charge in defense of free speech. And then for those of you who are not only watching me on Rumble, but maybe you're trading the stock, invested in the stock, this is another great way to support the company that supports you. Rumble, day in and day out, is in a back alley fight with censorship. Thus far, they're really scrappy. They've been holding up, but let's see if we could tip the scales even more. So shout out to Rumble, pinned to the top of chat in the description of the video, especially if you're watching on Rumble right now. Highly recommend you check this out. Rumble.com/premium/Kohrs10, and where you're checking out, just use that code Kohrs10 and you're going to get $10 off the annual subscription. So make sure to check that out and shout out to them. With that being said, let's bring it to the market. So what's the official headline on the day? Stock futures slip as investors look ahead to key inflation readings due this week. I'll be covering that, but the real story right now is what's going on with tariffs. Trump's conflicting business policies sow economic uncertainty, and right now that uncertainty relates to tariffs, the quote-unquote trade war, which was getting rebranded as a drug war, but now it's back to a trade war. No one really knows the severity, but here's where we're at. Trump sets a 25% steel aluminum tariff, widening the trade war. Once again, it started as a trade war, then it went to a drug war. Now we're back to calling it a trade war.
Another way of saying we're doing a 25% tariff on steel and aluminum. So the failed American trade policies have led our once incredible United States steel and aluminum industries, once incredible, not now, but they're not bad. I saved them because of my first term. Totally saved them. If I didn't do what I did, I put massive tariffs, not the highest level, but pretty massive tariffs. We took in a lot of money and we took in a lot of jobs. But we were being pummeled by both friend and foe alike. Our nation requires steel and aluminum to be made in America, not in foreign lands. We need to create, in order to protect our country's future, a resurgence of U.S. manufacturing and production, the likes of which has not been seen for many decades. It's time for our great industries to come back to America. I want them back to America. This is the first of many, and you know what I mean by that. We're going to be doing others on other subjects, topics. Protecting our steel and aluminum industries is a must, and today I'm simplifying our tariffs on steel and aluminum so that everyone can understand exactly what it means. It's 25% without exceptions or exemptions.
No exceptions,
countries,
no
matter where it
exemptions
comes from,
at all.
All countries. If made in the United States, however, United States of America, there is no tariff, it's zero. So if it's made in the United States, there is no tariff. All you have to do is make it in the United States. We don't need it from another country. As an example, Canada.
All right, right there. You get the idea. There's no questions. 25% steel, aluminum, and there are zero exemptions to this rule. This went into effect last night, and already we're hearing a little bit of the chatter. Not everyone's so happy. Trump's steel tariffs could trigger broader trade war as EU threatens proportionate countermeasures. If they do that, good luck to them. But I want to remind everyone that our economy is far, far, far larger than anyone else's. So if this becomes a painful thing for us, understand that it's going to be a much more painful thing for anyone else. I'm not going to say it's easy for us whatsoever. Obviously, you're seeing the market react in a little bit of a negative manner, which is 100% expected. But understand that similar to Canada, Mexico, already Colombia, everyone's going to end up doing what he wants just because he's playing with all the chips. That's how this situation goes. Here, hang on. I have too many things open right now. Asian economies scramble to appease Trump as the U.S. president ratchets up tariff threats. Trump said on Friday that he would announce reciprocal tariffs, duties that match those levied on U.S. goods by respective countries as soon as Tuesday to take effect immediately. Most economies in Asia had a higher average tariffs on imports compared with the U.S. as of 2023. So this is kind of the situation. I feel like a lot of people who, for good reason, just didn't follow tariffs and the economies and global trade. And it's boring. It's a nerdy thing to get into. But please understand, coming into the office this time around, Trump is right in saying that we were definitely getting, I guess, the short end of the stick, if you will, on all these tariff deals. Most people were tariffing us far more than we were tariffing them. It's actually very, very few examples where it was imbalanced in our favor. And Trump is now saying, okay, the time of everyone riding off the American economy, the American taxpayer, the American coattails, it's just over. And right now, there's a lot of people, especially in other countries, they don't want it because it's going to hurt them. And then right now, all the people who are particularly against Trump are going to say, well, that's just unfair, not really understanding how this has gone historically. Historically, as a trade partner, the U.S. has not been getting the good deal. So that's just a very quick synopsis of history there. But I would implore all of you, when you have some free time today, tomorrow, this weekend, when you're sitting by yourself on Valentine's Day, because let's be honest, give it a quick search. Look it up. Look at the actual history of how tariffs have gone, and you're going to be a little bit surprised of saying, wow, people are more than happy to tariff the hell out of the U.S., but when it goes the other way, people are not so happy. Just because these economies have dodged tariffs for now, it doesn't mean they can breathe easy. Washington's mood could shift and tariffs could still be imposed later. So we're in the very tumultuous time where we don't know. Trump could fire off a Truth Social, a tweet, a press conference at any moment, and tariffs could be added on and look for the market to absolutely dump within seconds, or the opposite could happen. And all of a sudden he could say, you know what? I had a super good call with President Xi Jinping, and we're actually going to be strengthening our trade alliance, and there's no more tariffs, and there's free trade between the two countries, and the market could rip. I'm not saying that's a high probability, but I'm saying it's a non-zero probability that we live in a world right now where if you're trading the overall market, literally it will be decided by like random tweets, like you making a ton of money or not making money at all and getting completely blown out. It could just all be related to a singular tweet that pops out into the ether. So be careful with all of that. Now, on top of all that, don't forget that Chair Powell testifying at 10 a.m. today, 30 minutes into the trading day. Today's for the Senate. Tomorrow is for the House, same time, 10 a.m. But also tomorrow we get the CPI report, the Consumer Price Index, which is a very important inflation measure. Right now, the line in the sand is 2.9%. If we come in hot, not so good. If we come in cool, actually pretty good. And don't forget, Michigan's numbers last week on Friday were a whole percentage point higher than expectations. But I should add on a little caveat there. I found that whole situation was so strange that I looked into it, and I don't want to, I guess I want to inform you. I don't want to paint anyone's opinion, but Michigan's numbers are not as quantitative as you would like them to be. In fact, it could actually be very politically charged. There's a lot of opinionated qualitative aspects to their measure rather than just cold, hard data. So I just want to throw that out there because I think a lot of us were shocked last week when Michigan's numbers came in so high. That wasn't a measure off of pure data. There is a lot of personal bias within that particular measure. I didn't know that myself until I looked it up over the weekend. But once again, another reminder that not only should we consume this data, but we should understand how the data is even achieved, because some of it is super good and some of it is complete baloney. So just want to share that. And then I actually found out other things as well. Like, for example, the Bureau of Labor Statistics. Did you know that a lot of their numbers literally just call from, like, they have random people they call and they're like, hey, are you working right now? And people say yes or no, and they mark it down. And then they just extrapolate that out to larger communities. A lot of it is literally based on just phone calls, which I found completely insane. But hey, the more you know. So anyway, inflation report, Powell again tomorrow. Then on Thursday, we have the normal initial jobless claims and the producer price index. And then on Friday, we have retail sales. So important report, inflation report, Powell testimony. So from now until the end of the week, we have a lot going down. I do also want to give you a friendly reminder that next Monday, the 17th, the market is going to be closed in observation of President's Day or Washington's birthday, or whatever we're going to be calling that particular day. Doesn't really matter, but the market is going to be closed next Monday, February 17th. We're also in earnings season. This morning, we heard from Coca-Cola and Shopify. I know a lot of you are watching SMCI right now, and for good reason. It's just rippity, skippity, doodah to the upside. So that's going to be reporting after the market closes. You have Upstart, DoorDash, Lyft, tomorrow, CVS, Reddit, Robinhood, Thursday, John Deere, Crocs, Coinbase, that's going to be a big one, Twilio, DraftKings, Airbnb, Palo Alto Networks, Roku, and later on this week, we have Moderna. So you could get this from @eWhispers on X, or you could just screenshot it. It's also in the newsletter, just to remind everyone. But circling back, Coca-Cola sales easily top estimates as global demand rises. How is it doing, though, in pre-market trading, currently up 4.6%, closed out the day at 64.55 up to 67. This isn't a name that I really actively trade. I only really know about it because Warren Buffett makes apparently a shitload of money off the dividends alone, and he's been in it forever. So not really the most interesting one to me, but obviously a pretty solid earnings beat, especially in the face of the fact that the market's looking pretty rough right now. So just figured it was worthwhile to call out. And now it's probably going to be my favorite part of the show, where we get to talk about drama. Love it, love it, love it. I know a lot of mature humans in this world say, no, not my drama, not my problem. Don't tell me. I don't want to know. I have my own life. Then there's more fun people who are like, dude, drama? Tell me all the tea. I'm in that latter camp. And right now we have the white tech bros version of Drake versus Kendrick. We really, really do. This is some billionaire drama that I'm kicking back, getting some popcorn because I'm so elated that this is happening. It's going to be exciting. We're going to get fireworks from this story for weeks, if not months to come. This is the heavyweight bout of like autistic nerds. And I'm all here for it. Musk's $97.4 billion OpenAI bid piles pressure on Altman. So you have Elon Musk, obviously world's richest man. Then you have Sam Altman, another rich billionaire nerd, not as rich, but he made OpenAI with Elon Musk. So they were lovers at one point from a tech billionaire standpoint, and now they're haters. So anyway, yesterday, Elon, unsolicited, put together a consortium. Dude, side note, I cannot wait one of these days. Not only do I want to be a source, you know how like all those things say, like, according to a source, I aspire one day to be a source, and I also one day aspire to be a part of a consortium. It just sounds so cool. Like, I don't know if there's resumes. I don't know if you have to get picked, but I want to be in a consortium. It sounds so fucking sick. I'm not even 100% sure what it really legally is. It sounds like it's a bunch of rich people together on a particular like chat group. Like, should we buy that? Yes. I'm good for $1 billion. I'm good for 500 million. I'm good for 4 billion. It sounds like it's honestly just a text group, but how cool would that be if you're in the text group called the consortium? Like, if I put together a group of guys and we go to a pizza place on a Friday night, like, is that a consortium? I put together a consortium to buy a pizza. Like, does that work? I don't know. You guys get back to me on that one. Anyway, I don't want to get too far off the rails, but like I said, I aspire to be a source that is one day quoted according to a source. And one day I aspire to be a part of a consortium, even if it's as basic as buying some pizza and beers with my buddies. Like, hey, the consortium put this together. So anyway, throwing that out there. Musk put together a bid from his consortium, once again, just rich buddies, for $97.4 billion to buy OpenAI. Right away, Altman says OpenAI is not for sale after Musk's offer. This is not surprising to anyone paying attention, but as mainstream financial media does it, they make it sound so boring. He didn't just say it's not for sale. He was the most petty motherfucker you could have possibly been. No, thank you, but we will buy Twitter for $9.74 billion if you want. And then right away, Harry Balls, aka Elon Musk, replies, swindler. How can you take such a fun story and make it so boring, Bloomberg? You have the world's richest man fighting with another billionaire, and the guy's like, nah, you can't buy me, but I'll buy X off of you. And then he changes his name to Harry Balls, so everyone seeing Harry Balls calls Sam Altman a swindler. It's fascinating. I love it. Absolutely love it. And then it gets better because apparently Sam Altman was doing some, I don't know, he was just around and people thought, hey, we should ask him about this. So we actually get some audio to the situation.
Musk bid for OpenAI.
Yeah.
How seriously are you taking it?
Not particularly.
Not particularly. Why do you think he's doing this?
To slow down a competitor.
And Stargate?
What
Do you
about
have
it?
the funding?
I'm not the one who tweeted funding secured. I just actually try to
Dude,
show up.
shots all over.
Just a quick one.
Shots all over.
I don't know. I'm curious. I think it's to slow down a competitor and try to catch up with his thing, but I don't really know.
Yeah, but you know well, right?
To the degree anybody does, yeah.
Dude. So, oh my God. When people aren't media trained and then they're already like savant level intelligence and you pepper in a little bit of autism and then you give them billions of dollars and you shove a camera in their face, you know you're going to get fireworks. How awkward. Okay, wait, is that? Nope, I have to go back on the video to get this now. Come on. Look at the face right at the end. First of all, amazing cinematography on that shot. The guys, you could just tell the guy, he was like ready. He's like, duh, I'm just going to get it right between the shoulders. But look at that. Look at that face. This is just a lost deer in the woods. And it just turns out that that lost deer is incredibly intelligent, maybe morally questionable, autism, billionaire, fighting with the world's richest man. It's everything you need in a movie. It's everything you need in a drama. This is awesome. Like I said, this is the white VC San Francisco version of Drake versus Kendrick, and I'm here for it. I want to know how it goes. So let me give you a little bit of a background of like why this is boiling over so much. A couple years ago, Elon and Sam Altman together created OpenAI. The concept of OpenAI, it's in the name, open source. We're going to do a non-profit company leading the charge on AI that is open source, accessible to everyone. We're going to do it right. We're going to do it accountable. And most importantly, we're not going to get, tempted by the almighty dollar. That's how it was running for quite a while. And then all of a sudden, Sam Altman started to make some decisions related to the status of the business that Elon wasn't so happy with. So he pieced. He said, yo, gone, see ya. And then since then, Sam Altman has been more, upfront and apparent of switching from a charity status to a for-profit status. At first, it all started because they had to spin up a little bit of a subsidiary of it to be able to take an equity investment from Microsoft. And then Sam Altman said, hey, it would be so freaking sick if I was a billionaire. What if not just a subsidiary? What if we put everything in this and then we just run a for-profit business? And then obviously started to do that. And I have to admit, it seems like it was exclusively to make money. And then Elon caught wind of it and he's like, no. So there is some legitimacy to the argument that Elon Musk is currently doing this to attempt to slow down this transition because he finds it morally questionable. And I have to admit, I also find it morally questionable. But then who's going to own it? I mean, OpenAI is a leading competitor within this space of the AI revolution. So I don't know if I don't trust Sam Altman. I don't know why anyone would trust Sam Altman. Just something about it. My spidey senses are tingling. But on the other side of the argument, do we want the guy who is personal friends with the president running Tesla, SpaceX, Boring Company, Neuralink, the most popular social media in the world, X, to also have the leading AI? I mean, I guess you could argue he already has Grok. I don't know. It just seems like we're getting a lot of power consolidation, and that requires quite a bit of trust in one individual to not completely fuck over humanity. So the whole thing is just getting wild, absolutely wild. And then this also does tie in with Trump and Stargate project, the $500 billion investment. Don't forget that a while ago, what's his name? Masa's son from SoftBank. He's like, I'm going to give $10 billion. And then Elon's like, you don't have the fucking money. And then Sam Altman's like, he does have the fucking money. And then they went to Microsoft and he's like, dude, I don't know who does or doesn't have money. This is the CEO of Microsoft. He's like, but I know I'm sitting fat on 80 bill that I promised. So my 80 bill is good. I don't know what's going on with SoftBank. So it's getting so convoluted and so tangled. And I find it to be way more fascinating than the Blake Lively, Baldoni story. This is the one we should all be in, because unlike actors that we're all going to forget about in 3 to 5 years because they're actors, we're talking about some of the most politically connected tech leaders of our time about to throw it down. I honestly wouldn't mind if this was settled in the cage. Truly. I would not mind at all if we called up and the UFC, if we said, yo, Dana White, we got billions of dollars of tech IP on the line. Let's set it up. Let's see how it goes. I think it's a fair one. I think it's a fair way to decide who should be most likely the most powerful man in the world. I don't think that's necessarily an understatement when we're talking about the leader of the AI revolution. So that's the current state of drama. And on top of it, Elon Musk's net worth falls below $400 billion for the first time in 2025. Man, I feel for the guy. I really do. I mean, I remember all those times that my net worth fell below 400 billion. Not easy times. So definitely when you're in a place that has reasonable flooring, pour one out for your guy because damn, it's tough to see someone fall like that. It really is. Tesla shares have tumbled 27% since peaking in December. And the fact that we went from 488.54 all the way down to 346, almost getting that downside gap fill. Yeah, that's why he's losing a lot of money on paper. There is an additional downside gap fill to 324. I do want to be very clear about two things. In the short term, I am trading this to the downside because it seems like a really good trade. But in the long term, I'm still a Tesla investor. Now, the other part of this is obviously social media and tech. I want to point out another crazy thing. Meta rally makes history as it goes on the offensive with AI. Okay, maybe the market is reacting to Meta, good earnings, getting into the world of AI. Maybe that's what the market likes. But when you guys come to my show, I understand you like to get my thoughts and opinions that potentially makes you look at this in a different way. So I fully agree. There is some sort of non-0% chance that Meta is going up and up and up and hitting a new all-time high because it's going on the quote-unquote offensive when it comes to AI. Maybe. Or let me throw out another potential reason. Zuckerberg copping a little peaky on January 20th, the day of inauguration. Okay, maybe that doesn't mean anything to you. Or maybe if you come to the 20th, remember the market not closed, and you realize how we've actually done since then, you're going to realize 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 green days in a row, folks. 15. Do you know how statistically unlikely that is? That Meta stock has closed higher 15 days in a row? That does not happen. We are breaking the laws of math, and it all got going right when he's copping a pig. Does no one understand that this is the secret to pushing the market higher? Yeah, maybe the nerds on Wall Street are going to say they're offensive with AI. Or we have a 15-day ripper as soon as this happened. Just throwing it out there. Just throwing it out there. It's another thing to consider when you're trading, when you're investing. I just wanted everyone to know. All right. Don't forget, you could check out the newsletter. You could sign up for the Discord. That's free if you use the code Goonie for the first month. Yesterday, crushed it, $9.75. That's all in the description. My mod will post it. As we are about to get to market open, we have 15 seconds to go. This is now the perfect timing for me to set everyone up on the day. So let's get over to the 1 minute, and then I have a lot of cool things to show you. So first rule of thumb is I'm not the biggest fan of trading right when the market opens. So I like to see how it does open. And with that being said, dingity ding, 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 the world's largest casino is now open. And golly. All right, SPY right out of the gate getting that upside gap fill, and the Qs are going for their upside gap fill. We opened below yesterday's low. That's a very high odds trade, And how is this looking? Oh man, not a bad day to be me. Here's my Tesla puts, currently up 69%, LOL, up about 7.2K, unrealized, up about 2.9K thus far on the day. So let me go over how I come up with my trading plan, what I'm seeing, what I'm not seeing, that type of a thing. How do I come up with these levels? So it really all starts with just me understanding some of the basic probabilities. Shout out to Edgeville. Before we get into this, I need everyone to understand you can get all this information for free. It's a free trial pinned to the top of chat in the description of the video. I promise you, you are not going to regret at minimum checking out this trial because you're going to get a lot of phenomenal information for free. Use the trial. I think you're going to love it. So the first thing I do is I come to Edgeful and I understand where we are from a seasonal perspective, and I'll look at the max data that they have, the 5 years. I understand that the month of February is typically bearish, and then I like to know what week we're in, and I can see we are at the start of a seasonal bearish time. Okay, good. That's the first reasonable check that I do. Then I like to know, okay, what are we doing with respect to the previous trading day? And that's why this one is called previous day's range. I like to, this is like one of my favorite things to use. And I could see right here, and this is important because it literally just happened in the market today in real time. When you break below the low, right here, low, broken, close is red. So if we break the previous day's close, there's a 77% chance, almost an 8 in 10 chance, almost a 4 in 5 chance that we will close below the previous close. That is a fascinating stat. That is a very high odds stat. The reason I'm bringing it to you right now is because the SPY, we already broke the low. We already broke the low. That's what happens. By definition, when you have a gap down, you're already breaking the previous day's low. That's just how numbers work. When you come in lower, that means you broke it. So out of the gate, I know that right away, we have a 77% chance that we will end up concluding till today below yesterday's, right here. Let me just show you this. We have a 4 in 5 chance roughly of closing today below yesterday's close. So right away, especially if you're a premium seller, that's a number you could be using. All right. That's one of the first things I like to look at. Awesome. And then obviously I'm basing it on close to close. They do allow you to customize it, and you can see from where we opened. So right here, we're loading the data. Once again, the past 5 years on the SPY, you could change your time frames. You could also change the underlying you're looking at. I just want to throw that out there. And right now, even check this out. This is based on the open. So not yesterday's closing value, but based on today's opening value, there's a 64% chance that we are going to close below that already. How crazy is that? That the market just opened, literally just opened. Here, I'll go to SPX just because I think it's going to be a bit easier. The fact that we already broke yesterday's low, there is right now a 64% chance that we will close today below 6,043.94 because that's exactly where we opened. So two pretty interesting pieces of information. So that's the next thing I'm going to look at. And as the market is filling out, I'm going to do two things simultaneously. Once again, this is all my morning prep work. The first thing I'm going to come to is the opening range. And as we've been showing you, you could change the time frame and you could customize a lot. So right now, this is on the 30-minute right here, 9:30 to 10 candle time, just to get the idea of breakouts, breakdowns, and the chance of a double test. So I'll look at the different ranges. You could look at the 15-minute, the 30-minute, and the 1 hour. That's building out right now. As that's building out, that's where I start to look at the big players of the day. And I see that Captain Condor is back. Captain Condor is back. Call credit spread up here at 609.5. Remember, when you have a call credit spread, you're betting on it being below that value at close. And then right here, a put credit spread, you're betting on it being above that. So this is starting at 609.5. And then the put credit spread is at 603.0. So I'm going to store all that information away and start to look at the chart now. All right. So as I'm letting that opening range breakout, I'm using the seasonality from Edgeful, knowing that generically for the next couple weeks, the bears from a seasonal perspective have the upper hand. I'm going to store that away. The next thing I'm going to use is seeing where our structure is. Are we breaking out from highs or for lows? In real time, we already broke the low from yesterday. So I know that we have a 77% chance, a 78% chance to close today below 606.6. Simultaneously, it's also true that we have a 66% chance to close below 604.4. So I'm like, okay, the fact that we broke the previous day's close and we're already in a seasonally bearish time, something interesting to know, storing that all away. And then from there, I start to, okay, and just so you guys know, the green solid line is yesterday's high, the red solid line is yesterday's low, and the white solid line is yesterday's close. So it's the high, the close, and the low. And then these yellow horizontal lines are all the key levels. And once again, I'm getting that from where all the options are structured. So we have Captain Condor. That's going to be the first thing that I lay out. That's up here, 6097.5 and 6027.5. This top one and this top and this bottom one, right where my cursor are, those are the Captain Condor levels. I want to pay attention to that. A pivotal tilt level that we're going to get from the options market of positive gamma, positive delta, negative delta happens to be at yesterday's close value at 6067. So I'm watching that to see if it's going to serve as resistance. But side note, and once again, you can get this from Edgeful, you can get the odds of these gaps. Right here, you come to the gap fill report. Once again, the SPY, we're going back on the 5 years. So if we gap down and the chance of it getting filled, a gap down filled, 59%. This is, once again, what this is being measured from is to the previous day's close right here. The closing price, the opening price, the chance of it. This is an example of a gap up, but I'm showing you the chance of a gap down. So gap down filled, here's a little explainer, which I really, really like. So you could just see where you close. So you open up here, gap down filled, and then gap down not filled would look a little something like this, where it kind of comes up, but doesn't actually get up to that trading value. So we're in this situation right now where we're either going to have a gap down filled or a gap down not filled. And once again, just to keep coming back to this to show you what it looks like. So we clearly gap down. Now, what's the chance of coming up to yesterday's closing value? Well, those odds over the past 5 years are shown right here. Gap down filled, 59% chance, as in you have a 9% edge. And then there's also a 41% chance, obviously the inverse, that it's not filled. So not the highest odds play. It's not like a 75, 80, 85% odds, but it's still an edge. It's better than flipping a coin. So putting that together, I know there's about a decent chance that we come up to here, but even if we do, I know that there's a big options level there, a huge options level there. And I could see that a bit better in some of this other stuff that I have. But once again, talking about the positive delta, the negative delta, the positive gamma, negative gamma, I know that there's going to be a focus in on that exact level. Once again, just from reading options. So this is how I came up with this. Not only is it the close with certain odds, but I know it's resistance. So that's how I came up with that. And then similarly, just from what we've been seeing, in case things do break down, let's say that we don't hold this and we start to puke, we know 6,000, once again, there's just a lot of open interest at that level. So not only is it a key technical level, it's a key psychological level, it's also a key options level. So that's how I say, okay, if we don't hold yesterday's low, I know that there's going to be the bottom side of Captain Condor. If the bottom side of Captain Condor doesn't hold, then I'm looking for the key technical, psychological, and options level at 6,000. So that's not only how I come up with these levels, but it's also how I come up with the trading plan. And what's super cool about this, once again, shout out to Edgeful, you can see what's still currently in play. So I'll switch it over to stock, SPY. So right now, the buy is bullish, the gap's not filled. This is the gap fill. You have the Orbo. We're waiting for that. We're waiting for the 60-minute Orbo. So these are all the things that are by definition in play. Kind of an interesting thing to watch throughout the day. Find this fascinating. So I'm pairing not only just the Bayesian probabilities of Edgeful, I'm then piecing that together with the options positioning and also the options flow of like, okay, is it bullish? Is it bearish? And that's how I come up with my trading plan. And that's also eventually you're going to get even quicker at doing all this to be able to lay out the levels and understand how you're going to want to play accordingly when we get to one of those pivotal levels. So if you want to check that out, once again, just to reiterate it and shout out to Edgeful here, it is a free trial. Pinned to the top of chat in the description of the video. If you want to rip through all those reports and the numbers and look at the favorite ticker, the underlying, the time frame, whatever is ideal for you and your trading methodology, they have it in there. Check it out with the free trial. I think you're really going to enjoy it. And it's going to be fascinating throughout the day today to see how this stuff does or doesn't play out. But I'm actively planning on trading off of this information today. I see a little bit of this pump right here. And I want to, okay, I'm just getting ready. We actually are above VWAP, but knowing the odds of this, I'm not going short right now because I'm mindful of the fact that there could be a nice upside gap fill, but I am looking for that bearish opportunity because I know that there's good odds that we close below 6066 and very good odds, well, better odds for that, but there's also very good odds that we close below 6045. So there's a 2 and 3 chance that we close below this, and there's a 4 and 5 chance that we close below that. Putting that together, then I'm going to kind of look at the options flow, and I'm also going to use the Orbo breakouts from Edgeful to really put together my own trading plan. So I hope that makes sense. I know I went through a lot of stuff there. I know that maybe it's potentially a little bit confusing. So please feel free. Are there any questions whatsoever on anything I just touched on? I find that, yes, sometimes it's very fun to hoot and holler and make a killing, but I think once in a while we need to kind of share some info of like, okay, how are we actually coming up with these numbers? So please let me know. Any questions, comments, concerns? I'm seeing people talk about NVIDIA. NVIDIA did pop, kind of rocky at open, had a nice pop there. Hanging out above 132. That's a pretty nice win for NVIDIA. Tesla tried to get going, got rejected. 345. Let me show you Tesla on the daily. This is incredibly important because it is a gap fill. So what we hit on Tesla today was the gap fill all the way back to Friday, November 29th. We got that gap filled. So there's an additional downside gap fill to 324.68. Let me zoom in so you could just see this a bit better. And now there's actually an upside gap fill. All right, so we got this gap at 345, so I'm deleting that. So right now, Tesla's in the situation where it has two distinct gaps. One very close gap to yesterday's low at 350.51, and then there's a downside gap that is a little bit of a puke distance away down at 324.68. So those are the two major levels I'm currently watching on Tesla. Microsoft, not looking the best. It's right at support. Hopefully that can hold. Palantir, another new all-time high. NVIDIA pushing up to get its upside gap fill to 141.88. Broadcom just kind of calming down. Meta maybe putting in its first red day, but I think Zuckerberg knows how to fix that. He'll just have to call it Bezos' fiance. Rumble not holding that trend line. Hopefully it can quickly reverse. Amazon not doing much. Netflix hitting a new all-time high yesterday. Apple just sideways grinding. Coin sideways grinding. Probably will do that until its earnings on Thursday. MSTR, same thing. DJT, same thing. ASML showing a bit of strength. Qualcomm, sideways grinding. Google potentially breaking down, kind of looking similar to Microsoft. If it does, there is a downside gap fill to 176.26. Ripple potentially swinging back around. Solana potentially swinging back around. Texas Roadhouse, unfortunately, taking a hit right here. That has to be illegal. Bonds, after a nice pop, giving some back. You have oil, clear bounce right off of 70, recapturing the EMA line, and then gold hitting a new all-time high early this morning. So that's kind of the generic setup. I know I ripped through that, but I do want to get back to showing you guys these levels because we're starting to see some weakness in price. Are we seeing a related weakness? Let's go over to the Mag 7. Mag 7 is getting hit ever since 937. The SPY is flat. And VWAP is at 21,751 on NQ. I am looking as of now for a short opportunity as explained by all the things I literally laid out to you guys in this breakdown. But I do like the fact that I know there's good odds. There's a 66% chance, according to Edgeful, that we close today below 6,045. Now, when I tell you there's a 65% chance, that's not a guarantee. It means 2 out of 3 setups in this situation, we would close below it. So you can't bet the farm on it because there's no such thing as a guarantee, but it's those types of odd stats, facts, figures, and probabilities that you would want to use to start to develop your own trading system and methodology. Those are the exact things you need to be doing day over day, whether it relates to futures, crypto, options, equities. It does not matter. You need to know the odds of the situation you're in one manner or another. If you're just ripping it from the gut, yeah, it's fun, but that's gambling. That's not trading. Trading, the difference there would be gambling is you're just ripping it, not knowing the odds of anything. Trading is you're taking calculated risk. So of course there's an aspect of risk to it, but you should know the paradigm of what in the world is going on. So what 66% is not a guarantee. You would be surprised by how many people think high odds is a guarantee. And just because something has decent odds, high odds, great odds, you would be unfortunately very, very, very surprised to find out how many people are like, well, no, it's high odds, so I'm going to bet the whole account. And they just don't understand basic statistics. So as we're waiting for this to play out, looks like we have the first 45 minutes of the day. The 5-minute went from bearish to bullish. The 10-minute went from bearish to bullish. The 30-minute is trying to recover. I'll be watching that for a rejection. The 5-minute bearish to bullish, 10-minute bearish to bullish. 30-minute is actually in the bullish territory, but we'll find out in 14 minutes when this bar actually closes. So right now we're in a very, very questionable, indecisive time because is it actually going to go bullish or is this just a fake out recovery that's going to get smashed? My best guess right now is that the market, if anything, is really just waiting for Jerome Powell to start speaking. He talks in 15 minutes. Jerome Powell is going to be testifying in front of the Senate. It is technically the semi-annual monetary policy report to Congress. It is the U.S. Senate Committee on Banking, Housing, and Urban Affairs. So that's what's going down today. That's a mouthful. But what you have to know is that Jerome Powell is about to get absolutely grilled. So we're going to figure that out. Matt, your room looks boring. I know. I just did a whole cleanup and it was far more than just the backdrop. But what I want to do is I'm in the middle of like redoing the entire, I'm going to redo the entire studio. So I have a lot of things ordered right now, but to get the right backdrop and the lights, it literally just takes time to get shipped. So my apologies if this white wall is offensive to you, but at least you could, I don't know, take joy in the lit up moon or Ned over there. I think there's a couple things that add a bit of color to keep you guys happy for the next week or two while I'm waiting for various things to be shipped to me from China. So it takes a while, apparently. Takes a while. Oh, VWAP. What am I going to be doing? Are we just going to get rejected right here? This is the point. I would not be chasing this up right now, just because I do want to bring your attention to the fact that options flow is getting hit. But more importantly, I want like the odds, folks. We live in a world of the odds. And right now, the odds are telling us that the bears are favored based on where we open and the initial price action. We broke yesterday's low. That is not a good stat for the bears, for the bulls. Sometimes the bulls do win on days like that. And I know there's decent odds for us trading all the way up to here. But in terms of where are we going for the entire day, the basic stats, facts, and figures, once again, according to Edgeful, do favor the bears. Timu got them tariffs going on. That's how it feels. So we popped a little bit and then just got range bound. We basically popped for the first 4 minutes, and since then we're just flat. Not much going on right now. What do we have? Tesla holding right above that 345 support. I'm torn. I don't know what to root for on Tesla, because when it goes down, I know my long-term account's taking a hit. But when it goes down, I know my short-term degenerate account is doing very, very well. So I'm torn on rooting for Tesla. I'm a long-term investor, but currently in the short term, I am long puts. So I don't know. I'm curious, but NVIDIA is looking strong. It has been looking strong. This setup is evident. The setup is there. Let me go to the daily chart so I don't have to keep switching back and forth. We also don't need that. Where's NVIDIA? Where's the daily? I mean, I kind of called this out a while ago. I played it, but I already took my profits when we pushed up a little bit. I think I had, 10, 20, 30% gain. But after this trend line breakout, that's exactly when I got in, got a pop up. I took my money. Right now, it's battling it out at the 48 EMA. There's still this upside gap fill to 141.88. So I'd be watching that. But NVIDIA is showing legitimate strength. Tesla's red, Microsoft's red, Broadcom's red, Meta's red, Rum's red, Amazon's red, Netflix is red, Apple's green. Apple and NVIDIA are the only green things right now. MSTR just went green, but there's a lot more red going on in the market at the current moment. But with that being said, remember, we're only 20 minutes into the day, so we don't have to lose our mind, but also that means things can get even more red. So all I'm going to be doing, I haven't placed any trades yet today, but here's my plan. I am going to patiently watch the order flow, especially when Jerome Powell gets talking and when I can get a better indication of how the markets are going to react to what he does or doesn't have to say. That's when I'm going to start trading. Now, if before then I see an interesting opportunity, because there might be a little bit of an intraday trend reversal here. Right now, when I'm talking about trend, higher highs, higher lows. If we break 603.07, that's a fresh low. That might be a trend reversal. If the Qs break 527.43, that's a fresh low. That might be a potential trend reversal. So kind of watching the situation here. Obviously, all my important levels are laid out. The high, the low, the close, and then the key option levels. I don't know. Oh, I was just explaining that there is a 66% chance we close below 6044 today. I like those odds. I'm just looking for that prime opportunity to strike on that particular stat. I hope that makes sense. And before, when I asked you guys if there's any questions, comments, concerns, or need for additional clarification, I kind of didn't look over at chat. So my apologies on that. I should do that now. Based on what we saw from the options flow or what we saw from the pure stats from Edgeful. Are there any questions? Is there any need for clarification? My apologies for not looking at chat when I said it before. I was just, I guess, talking to talk and not really understanding what I was saying, which according to my wife happens a lot, but we don't need to get into that right now. We'll save that for my therapist later. Let me have it. Show your portfolio. Which one? I have multiple. I have a crypto portfolio. I have a long-term investment portfolio. I have an algo portfolio. I have a swing options portfolio. I have a daily options portfolio, and I have a futures account as well. I have a lot. What time frame do you trade futures on? Due to the rules from all these sim to funded, you have to be out before the end of the day. So I'm in more of the minute chart time frame because I can't swing it overnight. Can you talk about the PLTR gap? What about it? A gap's a gap. A gap's a gap. Will you bring back Casper? Maybe. I don't know. A lot of the internet was hating on me for leaving up my decorations for too long. The OnlyFans portfolio. Oh yeah, that one's, it is small but mighty. Can you take a look at SMCI prior to earnings? Why? There's nothing about, there's been many studies done on this. There's no way the price action heading into earnings is not indicative of how the earnings goes. It's about a 50-50 relationship. Sometimes it is accurate and the other half of the time it is not. So going into this, trying to use price action right now to predict if earnings is or isn't a beat, that correlation does not exist. I have retirement portfolio, dividend portfolio, day trading portfolio, option selling portfolio, and my wheel strategy. I like that. The only one I don't really have, and this is on me, I should have one, is a dividend portfolio. I just don't have enough money. I would be able to have one if I didn't blow $700,000, $600,000 on AMC. That would have been a much better use of money. But that's on me because I'm a degenerate and no one came here thinking that this would be the best financial show that they've ever had. Do you ever trade TQQQ? No, but I'm not against it. I just end up trading either NQ or leveraged options on the Qs. Divs are so boring. They're boring, but they're consistent. And all you have to do is pick quality stocks with quality dividends. And then you just come back years later. You spent $500,000 on AMC? No. I would say it would be better described as in I fell into the tribal cult-like Kool-Aid drinking mentality so far that by the time I realized I was being actually retarded, I was already down that much money. It was, I don't know. It just shows the human mind. It's crazy how susceptible it is to those types of tribal-like things. I mean, look at the state of politics. Look at the state of crypto. Humans, for whatever reason, we are very, very, very much wired to get into those communities, even in the face of like information that makes no sense. Like actually it's counter information of what in the world's going on. So as a person who I believe I'm pretty objective, logical, and like try to base it off of like measurable data points, I myself fell deep into the tribe, drank the Kool-Aid, and I'm happy that I pulled myself out of it because there's so many people in it. But by the time I got out of it, I was down $600,000 to $700,000. I made $40K off of AMC. I was happy. Congrats. Yeah, I think the people who like really treated it as a trade from like the get-go are the people who did the best. Truly. I have the yield max. Dude, the yield max things are not good. If you simulate this, so this is why yield max isn't good. Let's just say, for the sake of conversation, if you put 100,000 or 10,000, it doesn't matter. If you put $1,000 into something like Tesla or $1,000 into the Tesla yield max, your goal here is to optimize your return at the end of the year. You would have more money in Tesla. The way those yield max things are created, they're forever decaying. So like if you compare it apples to apples, the same amount of money, one in the underlying, one in the yield max, I actually couldn't find one that the yield max outperformed, even accounting for what they were paying. So I want to be very clear there. I am not a fan of these yield maxes. I found them intriguing when they first came out, but I cannot find a yield max that is actually doing better than the underlying. And it's how those particular things are created, like the basket of shit that they're in there to make it. So be very, very careful with it. And I highly, highly, highly implore you to like just do a head-to-head comparison. Like you're most like I can say this pretty confidently, I could not find one that the yield max was better off. Have you done training specific videos? Yeah, quite a few of them are in the Discord. All right, we almost broke down. NVIDIA's having a good day. Tesla's having a bad day. Let's look at those flows directly. So here's Tesla. Tesla getting slaughtered, and then NVIDIA, I bet, is ripping. Yep. Look at that. Someone is just splashing the pot right now on NVIDIA, starting just now at 9:56. Facts, I tried yield max and it was not better than the underlying. Only if you get lucky and things are going up, otherwise sideways. Yeah, yield max, for most people, in most circumstances, you should just not consider yield max. I've done the math. I've done the back testing. It is in very, very rare circumstances that it is better for you to be in yield max than the underlying. And you don't have to take my word for it. Literally just, you can simulate it of if I put 1,000 in here and 1,000 in there, what would be better off after X amount of time? The underlying is going to do way better. All semis are up. A lot of semis are up. I don't think all of them. Broadcom was down. Yeah, Broadcom's down. That's the second biggest semi. Are you still friends with the dudes from True Trading Group? I am not. Please, Matt, show your crypto and long-term portfolio. Why? That's not the most fun. I mean, my long-term portfolio is blue chip stocks and the overall market, and my crypto portfolio is like 95% Bitcoin and then some Solana. That's my crypto portfolio. That's my long. When you're doing the longer term investment stuff, I actually find that to be the easiest. Long-term investing for the equities market, you're just the overall market. Do the overall market, tech, and maybe do like a little bit of Bitcoin and gold and bonds. Like it's not difficult. And then the same thing with crypto. My crypto portfolio, like I said, I think it's 90. It's somewhere between 90 and 98% just straight Bitcoin. Like there's nothing fun or sexy or exciting going in on that. Out of Cardano, I've been out of Cardano for a while. It's kind of funny. When you first start off, you start with Bitcoin, then you learn so much and you start getting all these other cryptos. And then you realize that all these other cryptos, just the odds of them being successful are very, very low. So then you end up just at Bitcoin. It's a really interesting learning curve. It's a very interesting journey that apparently everyone in the world of crypto goes on. You start with Bitcoin, you get excited about everything else, and then you realize that everything else is kind of bullshit. And then you just go back to Bitcoin. How much XRP do you have? I have none. I'm not against actively trading XRP, but I would never invest in it. I think investing in XRP effectively just means that you have like single digit IQ. It really does. Dude, if he's not showing you his pepperoni nipples, he's not going to show you his crypto account. Maybe later, if you buy me dinner. I don't know if I have to be sexually accosted on my own show on the day of my daughter's wedding. Are we about to break down here, dude? NVIDIA is now getting smashed, team. Mag 7 is dying. The SPY is not looking so healthy. The NASDAQ is also... All right. I have a short signal that's going to fire at 66. Do I want to take it? I have a short signal... It would have just got me in and then instantly would have bounced against me. All right. Maybe I'll be a bit patient and see what's going on. Jerome Powell is starting to speak, so hang on. Let's get this rocking. I have him ready. Live hearing. Where is it? check back for a live video of this hearing, or how about give us the live hearing right now? I'm on the website and it literally just says check back. All right, let me see if I can find a different link because their own is not working. Senate Powell. The Hill, Wall Street News. We're just all awkwardly waiting, I guess. Are you guys seeing it live at all? Here's what I'm seeing. I guess I can show you. I believe it is right here. It should be right here. Am I doing this properly? I believe so. Where's my mouse? It's not showing me my mouse. This is what I'm seeing. It says check back for live video. Is anyone getting the live link? Check back. The coverage will start. Senate banking. What's it called? The Banking Committee. I'm on. There's videos live. That was streamed 1 month ago. Is anyone seeing anything that's properly live? Everything else that I'm seeing, I'm on their YouTube. They have nothing going on there. I could check CNBC. I don't think theirs is live because not even the Wall Street Journal's is live.
Will also say the committee is assessing data, the evolving outlook, and the
apparently
balance of
his written
risks
remarks.
in
Fed Chair
considering
Powell
both the
says central
extent and
bank
the
doesn't
timing
need to be in a
of
hurry
any
to
future
lower
cuts.
interest
So
rates
overall,
further.
Not a lot of surprises here. Powell does use some softer language throughout about conditions that appear or seem stable, potentially giving himself
How is
some
this
cover
not
or
loading?
some wiggle room. But overall, he seems quite comfortable to have the Fed remain in its current holding position, given where the economy is right now. Guys.
Megan, thank you very much. Megan Casella with that Powell testimony, not saying anything different than he said during the last press conference, and he doesn't have any reason to because the next meeting is more than a month away. I think a little month and a week away or something like that, and there aren't
pulled out of the organization as President Trump.
All right, I found one
getting ready to
stream.
be sworn in. To the American people, this is flip-flopping in the political wind.
Found
Too
one
much
that's
focus
working.
on climate change instead of supervision is consequential. And in March, just 2 years ago, we saw the failure of Silicon Valley Bank. SVB marked the third largest bank failure in U.S. history and the largest since the 2008 financial crisis. And yet not a single federal regulator was held to account. In fact, the FDIC filed a lawsuit against bank executives which accused the SVB of egregious mismanagement. And I agree. How is it that no bank supervisor has faced any consequences? With 30 MRAs and MRIAs that never had timely action at SVB, how can the people who are supposed to be our cops on the beat have not faced any recourse for such egregious failures? I simply don't understand. We must all address the fact that over the last 4 years, the Biden administration and Bidenomics have devastated, decimated, and destroyed hardworking families' ability to support themselves. During Joe Biden's time in office, overall prices rose by over 20%. Energy prices,
NASDAQ is getting
34%.
hit.
Transportation
Mag
costs,
7's getting hit.
31%.
SPY's getting hit.
Groceries, 22%. But that's not
It's
all.
diving right now,
Thanks
folks.
to Bidenomics, 2/3 of Americans have less than $1,000 in their savings accounts. But there is good news. Things are going to get better. During his first term, President Trump
Jeez,
kept his
dude.
promises
Market's
to the
getting
American
hit
people.
right now.
In the first 3 years of his presidency, President Trump built the most inclusive economy ever. 7 million jobs created, and 2/3
Remember,
of the women,
66%
African-Americans,
chance
and
we close
Hispanics.
today out
It's
below
time to once
6044.
again make America's economy work.
All Actually,
for the folks
60.
working paycheck to paycheck.
Yeah,
Joe
6044.
Biden broke
66%
our economy,
chance.
and Donald Trump will fix it. For too long, bank regulators have followed a black box regulatory framework with little to no recourse. The FDIC, under President Trump's leadership, recently released never-before-seen supervisory documents which confirmed that Biden's Operation Choke Point 2.0 was real, despite assurances that these unacceptable practices would end following the Democrats' first
Options are still dying.
Choke Point 1.
Mag 7 might be basing.
We are seeing an unfair playing field that results in disastrous consequences
Dude,
for
that's
legal
brutal.
businesses
Just
and law-abiding
vomit.
citizens. On one hand, if you were in the private sector,
Spy already took out
and you
this range
do
low.
your job poorly, you would face consequences, reprimands, suspensions, or even being fired. But if you are within the walls of the federal government, such as a bank regulator, you will face no consequences for your actions, even if you pressure a bank to cut off services to digital asset firms, political figures, and conservative-aligned businesses and individuals. To me, that goes against the principles of fairness and market access. Over the last 2 years, as the ranking member of this committee, I have consistently argued that Basel III endgame proposal will raise costs and limit credit access for hardworking Americans. And while I'm glad this proposal was not finalized, the uncertainty surrounding Basel III forced banks to put capital on the sidelines, limiting access to that capital for local small businesses across our country. Now, as chairman, I plan to work to rectify the issues of the Biden administration. Chairman Powell, I look forward to hearing from you on the Federal Reserve's future and the plans that you have for right-sizing the financial regulatory framework, specifically around Basel III. To create jobs here in America, we need to make sure there's capital and liquidity in the market. And we also want all Americans, even those growing up in poverty like I did, to know that they can access the capital necessary to start new businesses, grow existing businesses, buy a home, and pursue their American dream. Chairman, I look forward to your comments and your testimony. I will simply say that I believe that weaponizing an independent agency like the Fed for liberal positions, from debanking crypto, bank stress test, and the green financing scheme, is not calling balls and strikes as a fair referee. And I hope that we are getting ready to clean that slate, start afresh, and focus on a healthy economy. Ranking Member Warren.
Thank you, Mr. Chairman. Chair Powell,
Oh, here we
it is no
go.
secret that you and I disagree on the need for strong bank regulation, on monetary policy, and on the Fed's stock trading scandals. We have sharp differences, but I believe you are a principled public servant who cares about this country. We are at an unprecedented moment. Our financial systems are facing huge risks from the economic chaos of President Trump and his co-president, Elon Musk. From on-again, off-again tariffs to on-again, off-again layoffs for tens of thousands of government workers, to on-again, off-again cuts in domestic grain purchases, to on-again, off-again support for medical research. Now, co-president Musk and his OMB director have frozen all work at the Consumer Financial Protection Bureau. There are now 0 cops overseeing
Tesla's
the
getting
$18
murdered.
trillion consumer lending market. 0 cops. Investigations into illegal foreclosures and auto repossessions canceled. Exams of giant credit card issuers to weed out unlawful junk fees canceled. Probes of illegal debt collection practices canceled. Rules to save people billions of dollars canceled. If Musk and his OMB director succeed in killing the CFPB, it's like putting a sign on every checking account, every credit card, every mortgage application,
Mag
and
7
every
bouncing a
car
little.
loan, Cops have been
SPY as well,
fired.
but
Let
I
the
need to be clear,
scams
the
begin.
flow is still very negative.
That is
I would not
all.
be attempting to buy a
Musk
dip.
and his Doge crew are
His
also
Doge
rooting
crew.
through the Treasury's most important payment systems, the financial plumbing that ensures that billions of payments go through, from Social Security checks to grants for community health centers. No one has verified how they got this access or what they are doing with it. No one has checked whether Americans' financial data has been copied or sold for the personal profit of Mr. Musk. Instead, we've had a series of misleading and conflicting statements by Treasury Secretary Bessent. After receiving public blowback, it appears that Secretary Bessent is now trying to throw the Federal Reserve under the bus. Secretary Bessent claims that Doge can't meddle with the Treasury's payment systems because ultimately the Fed is in control. Now, I'm not sure whether Secretary Bessent doesn't understand how the system works or if he's just trying to shift the blame to you. But I know he is wrong. The Fed simply executes the transactions that Treasury instructs. If Elon and his hackers, for example, initiate instructions to choke off payments to their enemies, or if they issue instructions to shut down payment for teachers' aides for kids with special needs, the Fed may have no way of knowing that the instructions were manipulated, and the Fed may have
These Tesla
no
puts are
legal method
cooking.
to
I'm up
override them.
9K.
Chair Powell, the next
If this hits
18 months
100%, I
may
might just take the
define your
profit.
legacy and the country's
Tesla's
trust
just
in the
dying.
Fed as an institution. I expect that you will work with Democrats and Republicans in Congress.
I haven't
if
done any
Doge's
futures
next
trades
move
yet.
is
I'm
to
just
try to
waiting.
commandeer the Fed's payment system. I also expect that you will not join the conspiracy to shutter the CFPB. Unlike the Treasury payment instructions, you can see if the CFPB's funding requests have been manipulated. I understand that some extremists have a different view about what the law ought to be, but under the law right now, impoundment is clearly illegal. Do not make the Federal Reserve an accomplice to this illegal act and forever sully the reputation of the Fed. Keep the CFPB funded exactly as the law requires. We are in the middle of a crisis as Elon Musk tries to take over our government. But let's also talk for just a minute about your day-to-day job, meeting the Fed's dual mandate of promoting maximum employment and stable prices.
I'm not chasing this long at
It's
all.
now
The options
clear
market is
the Fed
not
acted
bullish.
too late
It is
and
clearly
let
bearish.
inflation
Look
get
at
too
the
high,
mags. This is
and
the
then
NASDAQ
responded
got hit.
by
The S&P
keeping
500 got
rates too
hit.
high
The Mag
for
7
too
is
long.
now getting hit.
These
This is
policies
not
made
a
the
time to
big
chase
drivers
long,
of
folks.
inflation, like housing costs, even worse. And they put Americans' jobs at risk, making it more difficult for them to afford a home.
I know that
and for
might be an
small
interesting
businesses to be able to
bounce. That might be a
finance
bit
their
intriguing,
operations.
but I'm just letting you know
I urge
the
you to
options
move more
market does not
rapidly
agree
to
with
bring
this bounce.
down interest rates, beginning with a meaningful rate cut next month. You have proven you can move quickly when it is politically expedient. After President Trump was elected, within the space of just a few weeks, you scrubbed seemingly all mention of diversity and inclusion from the Fed's website. You withdrew from an international central bank group that shares information on climate-related risks to the financial system. You instituted a hiring freeze that will limit the number of cops on the Wall Street beat, and you announced plans to gut big bank stress tests. I can see the immediate political appeal of your strategy, but ultimately it will fail. You will lose good people. Climate catastrophes will continue to mount, and the increasing vulnerability of big banks will threaten our entire economy. Sure, Donald Trump may be happier with you right now, but wading deeper into politics to please him over the long run will burn the reputation and the independence of the Fed and put our entire economy at risk. I urge you, don't fall into these traps. Thank you, Mr. Chairman.
Yes, ma'am. Today we'll hear from Chair of the Federal Reserve, Jerome Powell, on the semi-annual monetary policy report to Congress. Chair Powell, thank you for your testimony today, and you are now recognized.
Mag 7 picking up a little bit.
Ranking Member Warren and other members of the committee.
Nasdaq flat.
The opportunity to present the
SPY flat, but maybe starting to pick up after this pretty brutal
the Federal
drop.
Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. We are attentive to the risks on both sides of our mandate. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady now since the middle of last year, and at 4% in January remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures.
Mag 7 pop, gave some back, but looks like a higher low.
Years have helped narrow long-standing
Nasdaq doing nothing.
Employment and
SPY tilting back to the downside. Be careful on chasing this bounce,
Inflation
folks.
has eased significantly over the past 2 years, but remains
The
somewhat
only thing
elevated
going up
relative to
is
our
the Mag
2%
7, and even that
longer-term
stalled
goal.
out.
PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5%.
Climbing
for
up
14
slowly.
months.
Once again, options
That
do not
recalibration
agree.
of our policy stance was appropriate in light of the progress on inflation and the cooling in the labor market. Meanwhile, we've continued to reduce our securities holdings. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the FOMC will assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks on both sides of our dual mandate, and policy
Is this our turning
is well
point?
positioned to deal with the risks and uncertainties.
Mag
that we
7's
face.
holding, Nasdaq's holding.
This year, we are conducting
SPY
the second
might be
periodic
starting to
review
tilt
of our
here.
monetary policy strategy, tools, and communications, the framework used to pursue our congressionally mandated assigned goals of maximum employment and stable prices. The focus of this review is on the FOMC's Statement on Longer-Run Goals and Monetary Policy Strategy, which articulates the committee's approach to monetary policy and on the committee's policy communication.
Starting to get hit on the SPY.
The committee's
Delta's
2%
dropping.
longer-run inflation goal will be retained and will not be a focus of the review. Our
NVIDIA
review will
and
include
Tesla.
outreach and public
Uno
events
reverse.
involving a wide range of parties, including Fed Listens events around the country and a research conference in May. We will take on board lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer. Let me conclude by emphasizing that at the Fed, we'll do everything we can to achieve our dual mandate goals that Congress has set.
Watching this trend line.
We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thank you, Chairman Powell. Certainly,
Delta just dropped to almost the lowest reading of the day.
Impact. You have the opportunity.
Be careful being bullish here.
Responsibility of leading this country in the right direction economically, and I thank you for your commitment to having a conversation with all of us about how you do
Path
that well.
of least resistance 6025
some of it was illuminating,
or
but in the end, my goal is to make sure
6075.
that the American people, and specifically those working paycheck to paycheck, have more opportunities to succeed, not fewer. You have said that the Fed is not against innovation, and banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. Yet you have admitted that the threshold has been a little higher for banks engaging in crypto activities. Last week, I held a hearing on debanking and once again heard that federal banking agencies, in particular the Fed, use reputational risk as a tool to encourage the debanking of certain legal industries and law-abiding citizens for political reasons not tied to safety and soundness. Debanking is a top priority for this committee, and it certainly is for me, and one that I believe is a bipartisan issue. Will you commit to working with this committee to end debanking, including working with the new Vice Chair of Supervision, once appointed, to revise the Federal Reserve supervision manuals to remove reputational risk as a tool to weigh in on political topics?
I'm happy to make that commitment.
Thank you, sir. Accountability is very important. I would like to think accountability is a priority for everyone, especially the Fed, given that failures in Fed supervision can result in the loss of billions of dollars. Yet following the failure of the Silicon Valley Bank, which was in part due to the failures of its regulators to identify egregious mismanagement of interest rate and liquidity risks, we have yet to see any regulators be held accountable. And as you recall, that was a point of my frustration. As a guy who's spent a lot of time in the private sector, 15 years running a few businesses, I can tell you that accountability is a necessary part of making the entire organization healthier and perform its job as well as possible.
SPY's now popping.
The FDIC has begun the process of holding SVB executives accountable.
Because Mag 7, but NASDAQ is so
no
flat.
Fed employee has been fired, put on probation, put on performance improvement plan, all of which would be expected in the private sector, as I just mentioned, for employee failure. Please explain to me why Fed employees are held to a different standard from my perspective than everyone else, and what are you planning to do to take accountability for Fed failures in supervision?
So we've actually done quite a lot in response to the events associated with Silicon Valley Bank. So we've done many, many things. In terms of specific accountability, what we found was this was not a case of malfeasance or nonfeasance so much. It was a case of people were carrying out a specific playbook that failed to cause us to act in time for these things. So it wasn't actually particularly fair to the employees to say you violated our practices in some way. That wasn't really what happened. What
Mag
happened
7
was,
is still going up.
A lot of focus on
SPY
process
stalled out.
and on governance and controls, and not enough focus on basic bread and butter banking, credit risk, liquidity risk, interest rate risk, things like that. So as we discussed yesterday, we took very substantial steps to avoid further spread of those issues, and that was successful. But I understand your point on accountability.
This is one of the areas where you see the approach of looking at safety and soundness, and with the number of MRAs and MRAs that went really documented but no action was taken, that leads me to the conclusion that individual employees, supervisors, should have been held account for that. I'll move on, though. In the past, you've supported tailoring regulations so that we ensure banks of different sizes thrive and to preserve our diverse banking system. Will you commit to working with me as chairman to make sure that financial regulations do not impose more burden than is necessary? And I'll say that this comes after a number of conversations with community banks and regional banks that have continued to stress that the cost of the regulatory framework around them isn't just harsh, it's oppressive. Larger banks suggest that the cost per employee for the regulatory framework is $10,000 per employee. I think we can do better, and would love to hear your thoughts on that.
First of all, I will commit to working with you on that. We do try to avoid excessive burden. I think it's fair to take a fresh look frankly, on debanking. I think we all see, both in your hearing and in the one on the House side, we hear a lot of people talking about that. And, it's time to take a fresh look, I think. We don't intentionally do these things, but sometimes regulation leads things to happen, and we need to be working on that.
I appreciate that, and I'll turn over to the ranking member. I'll say this. After having a number of conversations with CEOs of banks around the country, one of the things that was made clear to me with specific statement from the CEOs is that the regulatory OCC and other regulatory agencies said specifically to debank certain industries, and that is the point that I'm making, and one that I think we have to solve. If it's legal in America to do business, we should do our part to make sure that they're banked.
Thank you, Mr. Chairman.
Mag 7 still climbing.
Weekend,
NASDAQ is not. NASDAQ popped, faded.
Effectively
SPY is climbing after an early morning vomit.
No more cop on the beat looking out for a family of 4 in South Carolina facing an illegal foreclosure. No more cop on the beat looking out for your grandma whose bank account has just been taken over by a scammer. No more cop on the beat looking out for people getting ripped off by giant credit card companies that are charging illegal junk fees. It also means that the CFPB is no longer doing one of its most important jobs, examining big banks to root out illegal conduct before it happens, or at least stop it before more people
Apple's
get
really
hurt.
popping.
Chair Powell, if the CFPB isn't on the job right now, then who is administering JP Morgan or Wells Fargo's consumer compliance exams to ensure that they are following the law?
Senator, I believe that, and you would know, that Dodd-Frank moved all authority for examinations in the consumer space to the CFPB. We still have some jurisdiction.
We'll talk about that in a sec. But the answer to my question, please. If the CFPB is not there examining these giant banks to make sure they are following the laws on not cheating consumers, who is doing that job?
I can say no other federal regulator.
No one, in other words. So thanks to co-president Musk and CFPB acting director vote, Wall Street banks no longer have to show the bank examiners that they're not illegally opening accounts people didn't ask
SPY
for,
new
like
intraday high,
with
Q's new
Wells
intraday high,
Fargo,
Q's
or
red to green
illegal
test.
junk fees like
Apple's
the Bank of
going.
America did. But CFPB has jurisdiction only on banks that have more than $10 billion in assets. So what's happening in thousands of community banks all around the country? Those that have
options flow
less
is
than
ugly.
$10 billion
Pop,
in
drop, flat,
assets.
recovery.
So Chair Powell,
This is
as
such
you
a
know,
mess.
the Fed oversees consumer compliance for state member banks that have less than $10 billion in assets. Has the Fed suspended consumer compliance exams for those smaller banks, or is the Fed still on the job to make sure that those smaller banks are following consumer financial laws?
Still on the job, business as usual.
All right. By forcing the CFPB not to do its job, President Trump, Elon Musk, and the author of Project 2025, Russ Vought, are giving Wall Street banks an unlimited get-out-of-jail-free card so they can cheat working families, even while community banks continue to play by the rules. You know, for any Americans who have money deposited at J.P. Morgan or Wells Fargo or any other of the giant banks, they should now know that there is no one on the job to make sure that those banks are not scamming you. Only the smaller banks now have a cop on the beat to make sure that they aren't cheating consumers. You know, if I have my money in one of those giant banks, I might think about going to a smaller bank where the protection, at least right now, is a whole lot better. Now, at the same time that the CFPB is under attack, the Fed is buckling to pressure from Wall Street to erase other safeguards for the too big to fail banks. During the first Trump administration, under your leadership, the Fed weakened the big bank stress tests.
Keys are going for another intraday high.
The big banks
Apple's cruising. Tesla stalled out
in advance. I called you out on it, but you promised right here in this committee that you would not give those banks the whole answer key. I'm going to quote you back. You said, complete knowledge of the models could lead to a model monoculture in which all firms have similar internal stress testing models, which could increase the correlation of risk in the system and miss key idiosyncratic risks faced by the firms. I agreed with you. But several weeks ago, the Fed announced that it has plans to do exactly that, hand all of the answers over to the giant banks. Chair Powell, why is the Fed about to propose a rule that directly contradicts your own testimony and, in your own words, would render the stress tests toothless?
Senator, in essence, because the ground has shifted very substantially in administrative law, and we actually want the stress test
VIX
to
is just getting crushed.
Resilient to that, and so
Dollars
we're making
doing
changes
nothing
to accomplish that.
Well, the changes are
much.
changes you've identified earlier as making those tests toothless. Look, the big banks are going to juice shareholder payouts and leave this economy more vulnerable to a crash. The Fed is knuckling under to bank
Mag 7
lobbyists.
has
We
been
know
long
how
and
this
strong
ends.
since 10-12.
People will suffer. Wall Street will
NASDAQ
get bailed
not so
out.
much.
I
SPY
urge
is now
you,
flat.
Chair Powell, to serve Main Street instead of Wall Street. Don't weaken these rules.
Thank you. Senator Rounds.
Thank you, Mr. Chairman.
Dude,
And
Mag
Mr.
7s are
Chairman,
so
Thank
strong.
you for coming before the committee. I appreciate the opportunity to visit with you.
SPY's taking a hit.
I've
Be
got
careful.
a series of questions, but I would like to give you an opportunity, if you would like. The suggestion that the ranking member has made here is that the big banks can now scam individuals right now. Any change in the laws regarding how they're supposed to be treating the individual consumers out there or anything along that line?
Law changes? No, I'm not aware of any.
Any
law
changes in any rules that they would have to follow?
Not that I'm aware of.
Are they still audited, and do they still have the regulators in watching all of their businesses just as they did before?
Well, they'd have all the regulators except for the CFPB.
Apple's pretty strong.
If, in fact, in the hypothetical, the CFPB weren't carrying that.
Microsoft
Anything
recovering.
else you'd like to add before we move on?
No, I'm good. Thank you.
NVIDIA
Thank you, Mr. Chairman.
decently recovering, but overall
as we
actually
continue
weak.
to prioritize the stability and the resilience of our financial system, the ongoing Basel
Netflix
III
weak.
rulemaking process has remained
Amazon
front
messy.
and center in shaping our regulatory framework. Now, I guess I was rather outspoken with my opposition
Google
to the original
strong.
proposal, and further work was stalled at the end of the last year. I guess my
Broadcom
question for
messy.
you today, sir, is could you provide an update on the Federal Reserve's progress
Tesla
in
sold off,
finalizing
now flat.
the Basel III endgame rulemaking process?
I'd be glad to. So we remain committed to completing Basel III endgame. We think it's good for U.S. banks. It's good for our economy that there be a global standard beneath which foreign banks can't fall. And that was one of the big ideas behind the whole Basel Committee approach. So where it sits now is we await leadership arriving at the OCC and the FDIC, and that seems to be happening. And when that happens, we're going to sit down with them.
Price is just getting stalled out.
Through to a Basel III endgame proposal, and I think we can do this reasonably quickly. One that is compliant, consistent with the Basel requirements, and also consistent with what other large jurisdictions are doing. I'm optimistic that we can do that fairly quickly, and we're committed to doing that.
We always wanted our banks to be competitive with European banks, and I'm just curious, the original proposal that was in front of you, and I'd like your thoughts on this, it was estimated to increase our bank's capital by 19%, which I think may very well have created a potential disadvantage within the U.S. institutions versus our European counterparts. With any new proposal, what's your thoughts? Would you make a commitment that this would be a neutral approach with regard to capital?
The main commitment I'll make is we'll work together with new leadership at the other banking agencies to do something. But that's certainly, you know, I've said many times in this committee that I think that the level of capital in the largest banks is about right, and so it'll shake out somewhere in that area, I would guess.
Our expectation would be, and the markets would expect that it would be
SPY
neutral
was
with regard
dipping
to,
a little bit of a bid right there.
In that range, but I want to.
Nasdaq is actually getting hit pretty hard right here.
And get their views as
Mag
well.
7 is still
that's a
strong.
good
We're being
starting
sold a very
Okay,
different
thank you.
story depending on what you're looking at.
The Federal Reserve's
SPY's
partnership
flat,
with the
Nasdaq's
US Treasury
down,
plays a
Mag
central
7's
role in
up.
supporting our nation's payment infrastructure, which processes a vast range of daily transactions, from federal benefit disbursements to debt obligations. Could you outline the Federal Reserve's role in supporting and managing the Treasury's payment systems, including how the Fed works to keep these systems secure, efficient, and capable of handling the government's high volume of daily transactions?
So it's a complicated set of arrangements, and I'll try to summarize quickly.
Nasdaq's still getting hit.
Congress authorized
Mag
spending,
7
and the agencies
a little.
carry out those spending orders. And when the way they do that is they send an order to pay a payee, a recipient, to the Treasury Department. Upstream, before it gets to the Fed, all of these decisions are made about: is this an appropriate order? Is this payee on the don't pay list, and all those things. Once all of that is set, it comes to the Fed, and by that I mean 4 or so of the reserve banks, and we actually make the payment. We take the money out of the Treasury General account and we make the payment. We make no judgments whatsoever. Those are all made upstream from us, and we are in fact the fiscal agent of the Treasury.
Confirm for me today, is the system safe today?
I believe it is, and I will tell you, we are very strongly committed to the integrity, efficacy, resilience, and all those things of this system. And you know, people do depend on this in a big way, and we're committed to that.
One last question for you, sir. The failure of Silicon Valley Bank, and the chairman brought this up. I'm just curious, recognizing a lot of banks out there looked at this. It cost the other banks in the system a lot of money to pick up the costs involved in the losses.
Nasdaq's still getting hit. Be careful. Going long on Nasdaq. Options flow down since 10:30. Mag 7 flat.
We expect that it will be revised.
SPY kind
In
of
a lot
down.
of ways, it's been revised. Yes, I can go into some details. I mean, we're one thing that didn't happen
just
was, for example, the supervisors didn't follow through aggressively enough on things that they'd said. If they'd done that could well have been enough to stop it. But a lot of it was just not focusing enough directly on what was a very large amount of interest rate risk, a large portfolio of long-term securities matched up with an unstable funding base. And somehow people wrote about that, and not the Fed, but others wrote publicly about this, but somehow we don't expect bank runs outside of a crisis in this country, and that's what that was. It was a bank run, and bank runs are incredibly damaging. I think everyone learned a lot from that and is determined to do better.
Thank you, Mr. Chairman. I think
SPY
this is one
new
that
intraday
is
high.
appropriately pointed out. I think this is an area where a lot more questions are out there yet.
Lethargic follow-through, though.
I think perhaps a discussion about how that playbook has been revised would be appropriate in the future. Thank you, Mr. Chairman.
Thank you. Senator Cortez Masto.
Chairman Powell, thank you, and thank you always for the conversations in between these hearings as well. Let me focus on a couple of things of concern, and you touched on a little bit of this, and I think this is important to clarify. There was a change in the law when the CFPB was created. The CFPB examines the banks and enforces the law.
Upside gap is 6066.
Is that correct? Or how would you determine that
Might be a
relationship?
gap and crap.
CFPB. So Dodd-Frank took a lot of the consumer compliance jurisdiction away from the other banking agencies and gave it to a newly created agency, the CFPB. We retained a residual amount of that, as we just discussed, which was banks under $10 billion in assets.
Spy popping right now.
The CFPB essentially took all of that when Dodd-Frank came into being.
So as it was created, when you two were working together, the Federal Reserve collaborated with the Consumer Bureau when supervising those large banks, correct?
Yes, we still retain supervision over all the holding companies and also of Fed member banks.
And let me ask you this then. Does the Federal Reserve enforce consumer protection laws now for things like money transmitters?
Not for money.
That would be the consumer protection. That would be CFPB.
Yes.
Okay.
That's
and
right.
so when we're talking about collaborating with the CFPB for financial technology firms, what would the Fed Reserve now do that if the CFPB, if the hypothetical is the CFPB no longer exists, what would be the Fed's role right now with respect to technology firms?
Tesla dying.
We have jurisdiction over banks and some financial market utilities.
So let me ask you this, because I know there's a number of Nevadans who file consumer reports of concerns about fraud and predators with the CFPB. The Fed Reserve doesn't receive those reports, correct?
No, I don't believe so.
And you have no role when it comes to consumer protection like the CFPB does, correct?
Unless you're a Fed member bank that has $10 billion or less in assets, then we have jurisdiction.
Right.
On a
So there
consumer.
is a gap. If the hypothetical is true, and what we're hearing that the CFPB is being shut down, there is a gap. What we're hearing in enforcement out there, and particularly when it comes to consumer protection. Is that would you say that's true?
Yes, for all banks that we don't supervise.
And I think that's the concern we're all having right now. Is this concern of when we're looking to streamline government, and listen, I'll be the first to tell you, there's a lot of bloat. We need to streamline it. We need to address regulations and overreach. But there's a strategic way to do it, and not this burn down the house that is going to harm people across the country, including in my state, those Nevadans that are looking for some sort of enforcement around consumer protection law. So that's what you're hearing from many of us on our side of the aisle here.
Can I just very briefly add that we do have some residual enforcement authorities, but what we don't have is examination.
This push seems so unhealthy. The Nasdaq Delta is at the lowest reading of the day.
Let me ask you this. And
people are buying calls and buying puts, but they're buying more puts than they are calls. This is crazy.
This, but the Federal Reserve Board members have been clear that future interest rate cuts are
Selling
unlikely to
calls.
happen despite the strong economy.
Buying puts,
But there are folks
close
in
out
my
those
home
puts.
that are in my
This
state
is
that are
messy.
waiting to buy a home. And we know that's still an issue. The high prices right now for home affordability, you add the interest rates to it, it is a problem. So do you think it's most likely that interest rates will remain above 6% for this year, or can you even address that?
You know, so overall, the economy is strong, growing 2.5% last year. The labor market is also very solid. Unemployment at 4%, quite a low level. Inflation last year was 2.6% for the year. So we're in a pretty good place with this economy. We want to make more progress on inflation, and we think our policy rate is in a good place, and we don't see any reason to be in a hurry to reduce it further. As it relates to housing, so it's true
Apple
that mortgage
is the
rates
strongest one of the day.
Remained high, but that's not so directly related to the Fed's rate. That's really related more to long-term bond rates, particularly the Treasury, the 10-year Treasury, 30-year Treasury, for example. And those are high for reasons not particularly closely related to Fed policy. They may remain high. I think, once we lower rates and kind of rates return to a lower level, mortgage rates will come down. I don't know when that'll happen. And even when it does happen, we're still going to have a housing shortage in many places.
Thank you. Chairman Powell, thank you again for being here.
Thank you, ma'am. Next will be Senator Kennedy.
Thank you, Mr.
Senator
Chairman.
Kennedy.
Thank you, Mr. Chairman, for being here. My friend, our ranking member, said that you are knuckling under to the big bank lobbyists. Is that true?
No.
Apple's still going. This seems to be the only thing getting real action today.
It seems to me that the big picture should not go unnoticed. Do you recall
Remember upside gap fill?
a year or two ago
59% chance of this happening, 6066.
inflation was raging? I think its peak was about 9%. Many economists and other experts, based in part on history, said that you were going to have to provoke high unemployment
Here we go.
and put our country into recession in order to get
Mag
inflation
7.
down. Do you recall that?
NASDAQ.
Very, very well.
Rip into it.
Are we in a recession?
We are not.
Would
You sure
as
about
an
that?
American trade places right now with Germany in terms of the economy?
No, I sure wouldn't.
How about China?
No, wouldn't trade places.
How about
Almost
France?
got there.
No, thanks.
Things aren't perfect. Inflation's obviously still sticky, and long rates are too high, which I want to talk about in a second. But the fact is, knock on wood, we have experienced a soft landing, haven't we?
Not for me to say, really. I'll let others
Well, have
make
we
that.
experienced a hard landing?
No, we sure
Are
haven't.
we in a recession?
No, we're not.
I call that a soft landing. And it seems to me that you and some of the ladies and gentlemen who are your colleagues at the Federal Reserve behind you deserve some credit for that.
Thank you.
I don't know why you don't take the credit.
Are we going to hit
Everybody
this?
else in Washington, D.C. does.
All right, gap filled.
Okay, I'm
Hit
not
it
saying things
just
are
now.
perfect, but
So that play called out by Edgeville just hit
I
right there.
never imagined
Gap down,
that our
gap size,
landing
0.37, filled.
could
Boom.
be this soft.
Nailed it.
Albeit
Now
not
let's
perfect.
see how the market reacts.
And I wanted to thank you and your colleagues for that effort. You sure didn't get any help from Congress and on the and our president on the fiscal side. I don't expect you to comment on that. You and the Federal Reserve can to a large extent control short rates, can't you?
Yes.
Through the Open Market Committee. You can't control long rates, though, can you?
No, we can't.
Why is that?
So a lot of things go into long rates, and one of them is the expected future short rate of Fed policy, but many, many other things go in. Expectations of inflation in the longer run, the sort of risks around the economy and around the budget deficit go into something called the term premium, which is the part we can't explain when we do these decompositions. And so, you know, it's set by supply and demand in the bond market at the long end, and we're not particularly. We have some influence, but mostly not.
Many Americans are looking at short rates and looking at the Fed's behavior and how you reduce inflation, but they don't seem they don't see the long rates going down, and obviously that affects mortgage rates. And I would encourage you and your colleagues to spend some time explaining to the American people why that is. Final question. If you went home tonight and Mayor Powell, your spouse, said, you know, I got a call today from our bank, and they're debanking us. They're worried about their reputational risk because they don't like our politics. Would you think that fair?
Upside
No, I
gap
sure
fill.
wouldn't. And as I mentioned earlier, I too am troubled by the quantity of these reports, and you know, really want to understand better why this is happening. one theory is that banks are just
We're
very
now at
risk-averse
options
around
resistance.
BSA and money laundering, and that's because we're so tough on them and that they just don't. Any red flag is enough. But it may be that this whole thing with reputation risk needs to be thought about. It's actually coming out of our one manual that we use. We're taking that concept out, the manual that we've been using for account access for master accounts. We're just going to take that out. But I think this needs a fresh look, and I think it's time for that, and we're going to do that.
Well, I've asked our chairman, and he has agreed to invite some of the CEOs.
Ever since
of some of
1008,
the,
options has
banks
just
that
been
have
really popping
debanked
on SPX at least.
the CEOs.
NASDAQ,
Their lawyers,
not so
their PR
much.
consultants,
Got hit, got a
not their
recovery.
priests, them. The
Mag
CEOs
7
to
did
come
pop,
in
but
and
now
let's
kind of
talk
giving some
about
back.
this and find out what the hell's been going on.
Thank you, Senator Kennedy.
Thank you, Mr. Chairman.
Senator Reid.
Thank you, Chairman Scott. Chairman Powell, welcome. Thank you very much. I think your
Resistance
monetary
right here,
policy
6075,
combined with
coming up to
fiscal policy over the
resistance.
last 4 years has made a tremendous difference.
Clear
We've
support
avoided
at
a
6050.
recession. And I'd like to remind people how far we've come. In 2020, the gross domestic product decreased 2.2%. The unemployment
Look at
rate
that pop
finished the year
ever
at
since he started
6.7%.
talking.
By 2024,
Powell pumped it.
gross domestic product grew 2.5%. The unemployment rate was
Feels iffy, though.
4.1%.
Like yesterday,
Labor
my
force
spidey senses are
participation
tingling.
rate went up from 61% to 62.5%. And that's a combination of your work together with the fiscal policy of the Biden administration. So I thank you for that. One of the issues before us today is the issue of tariffs. In July 2018 testimony, you stated, Mr. Chairman, countries that have remained open to trade, that have not erected barriers, including tariffs, have grown faster and had higher incomes. Do you still believe that?
Yes, I do. I would stand by that.
So President Trump's
Tesla's still
tariffs
getting
on
hit.
China, Canada, and Mexico will obviously raise costs on families. In fact, some economists, many economists, project about $1,200 per year households will be paying extra. An increase of inflation by nearly 1%, economic growth depression, and, for example, the increase of the average car price by $2,700. Is that a wise policy?
So I guess I ought to say this. I think the standard case for free trade and all that logically still makes sense. It didn't work that well when we have one very large country that doesn't really play by the rules. And in any case, it's not the Fed's job to make or comment on tariff policy. We, really, that's for elected people, and it's not for us to comment. Ours is to try to react to it in a thoughtful,
Calls being
sensible
bought,
way and
puts
make
are
monetary
flat,
policy
puts are
so that
currently
we can
being
achieve our
closed, but
mandate.
people are YOLOing into
Just
zero
this
DT
weekend,
calls like it's
the
their
president
job.
removed the board of
Look
the
at those
Kennedy
calls
Center,
just
self-chairman.
ripping right now.
What would you do if the president tried to remove a member of the Federal Reserve Board?
Calls are kind of ripping on the
It's pretty
NASDAQ.
clearly not allowed under the law.
Thank you.
Calls.
We've communicated back and forth about synthetic risk transfer as a potential danger to the banking system.
Dude, that is. It all happened at 10:20, just
Could you give us some
nonstop
insights
call
on
buying.
how we can improve financial stability
Tesla's
by
getting
regulating
murdered,
these
though.
transactions more appropriately?
So what we've been doing for some time now is looking at them on a case-by-case basis, and if they really do transfer risk successfully, then that's okay. I mean, it's a good thing if a bank wants to transfer risk off its balance sheet in a way that it gets compensated for and all that. But what you want to make sure is that the risk is really transferred, and that was the problem during the global financial crisis. Was sort of things that appeared to but did not accomplish a transfer of risk. So we see this coming, and we've been looking at these transactions on an ongoing basis.
Well, I commend you for that. In fact, what happens typically is the transaction becomes complicated by synthetic risk transfers, as it was the case with synthetic derivatives. So thank you for your attention to that. We've talked about housing. It's absolutely critical everywhere across the country. We're in a housing shortage of forced
About to see new highs on the SPY and the Qs, new lows on Tesla, new highs on Apple.
Fannie Mae and Freddie Mac, helping to support home
Crazy.
ownership. Does
Wild.
the federal guarantee backing Fannie and Freddie help make mortgage rates more affordable and home ownership more accessible, Mr. Chairman?
I imagine it does hold down mortgage rates, the fact that they're a sovereign risk.
And how important is the 30-year mortgage to ensure that families can afford a home?
In our housing market, the
Tesla
30-year
puts
mortgage is
are
very
cooking.
Yeah. And I have heard some discussions about eliminating Fannie Mae and Freddie Mac, which would be detrimental, I presume, to the housing market.
That's really a question for you. You know, I mean, putting them back in the private, putting housing finance back in the private sector has some appeal.
Tesla's
over the longer
getting
run, but I would go with you.
Thank you, Mr. Chairman, very much. Appreciate it.
Yeah, people are buying
Thank
calls
you,
like
Senator
no other.
Ricketts.
Well, thank you.
Remember, though,
Mr.
this
Chairman
is
and
now
Ranking Member
resistance.
for holding this important hearing, and thank you, Chairman Powell, for being here today to talk about our economy and all the things that are going on. I want to address again something that the ranking member started talking off about, which was characterizing the CFPB as being the cop on the beat here. But I can tell you, as having been a governor and having a Department of Banking that reported to me, that if
This
any
is a
consumer
murder
would
scene on
contact
Tesla.
us and
The
make a
Delta's
complaint about a
getting
bank, even a big bank like
destroyed.
JP Morgan, we would investigate, as could the OCC, the FDIC.
It's so bad it's doing this to the
so
Mag
to
7.
characterize that nobody's out there.
Nasdaq's
looking for
now
consumers,
turning.
I think is inaccurate.
SPY's even
We ought
maybe
not to try
turning.
and scare consumers right now that somehow this is the case, because if you do have an issue, if you're a consumer, please reach out to your State Department of Banking, because those folks are going to look out for you. I can tell you that because I used to have one of those Department of Bankings, and they did a fantastic job of looking out for the consumers. One of the things that has also impacted consumers is inflation. Prices under the Biden inflation were up 20%. An average household is paying $13,000 more today than they were for the same standard of living they had before Joe Biden got elected. We see that grocery prices, for example, are up 22%, rents up 23%. Simply put, Nebraskans are economically worse off today than they were 4 years ago, and I expect that that's part of the reason why we saw this change in the administration. They thought that that was not something that they wanted to continue to pursue. They didn't want the same policies being followed. We have to end the reckless federal spending, rein in inflation, and be responsible about how we make decisions to be able to grow the economy. One of those areas that I'm concerned about is the expansion of the Fed balance sheet. The Fed's balance sheet before
Options are turning. Be careful about going long here.
About
if you are going long,
$4.1
look for
trillion.
options to turn around, but
By
they're
May
dipping.
Of 2020, the Fed expanded that to $7 trillion, and by 2022, the Fed's balance sheet hit an all-time record $8.9 trillion. Inflation peaked at 9.1% that year, a high we had not seen since 1981. Now, I'm encouraged by the actions the Fed has taken with quantitative tightening to shrink the balance sheet down to $6.85 trillion, but $6.85 trillion is still too high. And one of my concerns with this, Chairman, is that that's kind of one of your tools to be able to guard against a downturn in the economy or some sort of shock. You obviously used it during the pandemic. Looking ahead long term, will the Fed Reserve continue to this course of unwinding the balance sheet?
Yes. So what we said is that we intend to slow and then stop the decline when reserve balances are somewhat above the level that we judge consistent with so-called ample reserves. The most recent data and the feel of the markets is definitely that reserves are still abundant. They're about the level they were at when runoff started, because the runoff has really happened out of the overnight repo facility, reverse repo. So yes, it's an ongoing thing, and we're not yet where we're headed.
So what kind of pace can we expect? And I know that obviously there's going to be a lot of factors like what happens
Order
to the economy
submitted.
over the course of next year. But if things were going to go along the way they are today, you've already said the economy's doing well. Inflation's a little higher than we want it to be at 2.6%, but unemployment's at 4%. If these commissions, and I think you used the word stable quite a bit, if these conditions were to remain stable throughout the course of the year, would you have a range that you could give us of where the balance sheet might be if we were talking again here in January 2026?
We Basically, we're going to be looking at reserve conditions in reserve markets, and trying to stop a little bit above what we consider ample. And we think we're, meaningfully above that now. We can't put a number on it because you can't directly know the demand for reserves other than by observing behavior in the market and then putting a little bit of a buffer on it. So I can't give you an exact number, but for now it's ongoing, and we have a ways to go.
What kind of conditions would have to happen for you to start going back to quantitative easing?
So go to quantitative easing. That's a tool we tend to use when we're at the effective lower bound and we can't cut interest rates anymore. So nothing like what you're seeing in the current day. It's a different test for stopping quantitative tightening, but we would use QE going forward only in a situation where rates are at zero, and we're a long way from zero now.
So that you think that, again, just generally speaking, then, if things were to remain stable, you'll continue to unwind the balance sheet, you'll continue the quantitative tightening. Can't give me a range on this? Is that what I hear you saying?
That's right. That's right.
Okay, great. Well, I encourage you to keep doing that because, again, I think that's important to be able to make sure that you've got powder for the next issue that we may face. So thank you very much, Mr. Chairman. Appreciate you being here.
Senator Warner.
Thank you, Mr. Chairman. Chairman Powell, good to see you. One of the things we've talked about in the past, and I've got 2 or 3 issues I want to get through fairly quickly, is that that while our regulatory framework should always promote financial innovation, that innovation can't come at the expense of things like anti-money laundering, consumer protection, financial stability. I continue to worry in many of these hearings where we keep seeing this regulatory creep outside the boundaries of traditional financial regulation. I think if we're starting a system from scratch, few of us would design it this way. But it is one of the reasons why I'm looking forward to working with Chair Scott and my colleague, Senator Lummis, on a framework at looking at stable coins in particular within the regulatory perimeter. I know my friend Bill Hagerty just introduced a bill in this area. I'm looking at trying to make sure we get those guardrails put in place, and how it touches the Fed is something that's terribly important to me. I know you and I have talked in the past about the notion
potential trend change incoming right now, watching the trend line on the SPY, watching the trend line on the Qs. Options are starting to bleed. Options are starting to bleed. Options are starting to bleed. Potential trend change
if they are similar to other activities.
The old 11 a.m. trend change.
So we definitely support these efforts to create a regulatory framework around stablecoins. Stablecoins may have a big future with consumers and businesses. We can't know that now, but it is important for the development of stablecoins in a safe and sound manner, and a manner that protects consumers and savers and all, that there be a regulatory framework. So we see these bills, and we're in contact as we were in the last Congress, and trying to add our technical thoughts and how to do this. And we think it's a very constructive exercise.
Well, we do think
NASDAQ getting hit, Mag 7 getting hit, S&P 500 was getting hit, catching a little bit of a bid right now in the all expiration.
On everything in crypto, from over the top to the other end of the spectrum, and I'm gonna need to rely on your expertise as well as we try to work through some framework for stable coins. I know there are a lot of earlier questions on CFPB. I think the record is
NASDAQ now catching a bid, actually,
$1 billion to consumers,
right at that trend line. Right here,
last time we had the previous,
trying to find support at yesterday's close. That's this pop right here.
Chopra, we were talking about $55 million to Virginians.
People closed out puts, apparently.
I mentioned this more for my colleagues.
I don't know
what.
NASDAQ popping again. What is happening?
Lots
Someone
of
is
things
closing out a
happening in
chunk of puts on
Normally,
the
we would
NASDAQ.
get maybe
Mag
3,
7's
5,
getting hit, though,
6,000
pretty hard.
folks on a teletown hall. We had 60,000 last night. I have not seen anything like
Order
that
filled.
In my time up on here on the Hill, and a huge amount of concern about what the Doge boys are doing, whether our information is safe, whether privacy is protected. I had one lady say,
in light of what was happening at CFPB.
That was not the right order.
Direct-
I was supposed to be
not a direct
short,
connection.
and I didn't even
She's
get my
saying
bounds.
his are deposits at her bank safe. We tried to give her a assurance, but I said, you know what, ma'am, I'm going to be talking to the chairman of the Federal Reserve tomorrow. And with this
Why did that not work?
diminution or shuttering, at least at the time being, of the CFPB, can I tell, I believe her name was Mary, can I tell Mary from Virginia that her bank account is safe?
I think bank accounts overall across the economy are safe. Yes, we've still got deposit insurance at the FDIC. And
There
the
we
banking
go.
system
Okay,
is well
now it
capitalized.
has Order
submitted.
Well, again, I think the concern was being raised was that the diminution of consumer protections lent her concerns about whether that dollar being safe. Last thing I want to recognize is that there's been reports in the media about the thinness in the Treasury markets, the number of additional bonding that we're going to have to do, particularly if with so many of these unpaid tax cuts. Matter of fact, one of the things that was really striking to me was that yesterday the president mentioned how he was, quote, examining Treasury debt payments for possible fraud and suggested that our debt might not be as high as possible. We all understand the full faith and credit of the United States is based upon a reputation. If this president were to suddenly say, I'm wiping off X amount of debt because I don't believe we owe it, what kind of effect would that have on both stability of the dollar and the overstability of our economy?
It will probably not surprise you that I will defer to you on that question.
So you think it would be, from a Fed standpoint, the President of the United States starts to saying we're not going to pay our Treasury debt. You're going to have no view at all?
I'm not going to comment on things that the president says.
I would like to see us at some point get a stronger answer on that, because I think that in light of the president's willingness to shut down agencies willy-nilly, his ability to potentially curtail payment of debt, I think would have devastating consequences on our economy. Thank you, Mr. Chairman.
Senator Britt.
Thank you, Mr. Chairman. Obviously, there's been a lot of conversation both in and out of this hearing room today. Conversations about a co-president referencing Elon Musk, referencing the work that Doge is doing. I think it's important to remember that President Trump ran on this. I mean, he said we're going to look for wasteful spending across our government. We're $36 trillion in debt, y'all. That's not only fiscally irresponsible, it is actually morally irresponsible. And the difference in this administration and the last administration is that President Trump is actually the final arbiter. And it's interesting that none of you had anything to say over the last 4 years when it is clear that our commander-in-chief was not in command. And if we're going to use the term co-president,
it's going
then
south
let's go back
now,
and
folks.
say co-president Jake Sullivan, co-president Ron Klain, co-president Jill Biden. I mean, it seems that some of the biggest decisions were made during the president's afternoon nap time. And so I just think we need to be a little bit more honest about what's been laid out and what's actually occurring. Chair Powell,
The Mag 7 completely turned.
I want to discuss
like
some monetary policy
100%.
issues.
This
But I
pop,
first want to
the
highlight
drop.
a few supervisory items.
Wow.
We unfortunately started 2023 with several bank failures in which the
SPY
Fed
is
itself
flat.
admits
Just
its
caught a bid.
supervisors were, quote, too slow to ask. The question has been asked earlier about who was fired, who was not. I think that
I'm
there's some
currently
real
short
merit,
at
to having
21,833.5.
accountability that we have
I'm
not
obviously
seen
just
there.
going to adjust
In
my
the
risk as
aftermath
quickly
of
as
those
possible.
failures, the Fed was certainly not slow to act when it came to
Would love for
new
this to snap
regulations.
23
like the new
and then
capital
test
requirements
800.
That would have put the U.S. banks at a global disadvantage and actually hurt consumers in my state. The way I look at this is the world came up with a gold standard. And then Vice Chair Barr said, hold my beer. And unfortunately, that hurts Alabamians. In addition to that, we had Community Reinvestment Act and stress testing frameworks that were basically adopted in secret. Or as we discussed last week, the reputational risk and just the arbitrary nature of that and those standards that were used to push political agendas. None of this is acceptable, and we've got to take a look at how to promote greater accountability and transparency into the Fed's supervisory function. Shifting gears, as of January 30th, the Federal Reserve had
I want to see a plummet all the way back to yesterday's low value.
Balance sheet of roughly
602.75, the start of this trend. I want to see.
In fact, I looked back, and the Fed has posted losses since September of 2022. Meanwhile, we've seen
who's with me? Are you guys long or short right now?
$2 billion since September.
I'm thinking we got the upside gap filling now. I'm looking for a puke. Mag 7 completely inverted.
These money transfers are requested by
NASDAQ
the
look
CFPB
messy.
Director,
As soon if the SPY vomits, like right here, if this option flow starts to puke, right now we're flat. If that starts to go south, I think we're golden.
So the director of the CFPB requests money, and we, under the law, we send that money. Yes.
So, in fact, but Dodd-Frank actually prohibits the Fed from actually reviewing or amending those requests.
That is correct.
And so it gives full discretion to the CFPB
up to, I think, 12% of our. There's a ceiling on that, but that's correct.
So just to level set, how many times has the CFPB funding request been denied by the Fed?
I put a poll up. Vote.
Denied under the law.
0, right?
0. Yeah.
Yeah, that's what I thought. And by the way, I'd like to applaud the current administration and acting director Vogt for inserting some accountability back into the agency by pausing these quarterly just blank checks. On that, I know there's been a lot of conversation around the Bureau over the last few days, but I do want to focus on those last couple of years, particularly the $2 billion the CFPB received from September 2022 up to the last receipt on January 2nd, 2025. Congress specified in statute that the Fed shall fund the CFPB through the combined earnings of the Federal Reserve System. However, as I mentioned, the Fed has no current earnings. It has a balance sheet of negative $200 billion. So instead of the recent audit statement saying the Fed is funding the CFPB through assessments on its reserve banks, Mr. Chair, there are only 2 statutes that authorize the Fed to make reserve bank assessments, and neither permit the CFPB to fund transfers. So what authority exactly did the Federal Reserve have to assess the reserve banks in this manner over the last 2 years? I just wanted kind of a fact-finding.
We looked at that question very carefully, and it's very clear on the law and the legislative history that we're still required to make those payments.
Dude, Tesla is getting murdered. I am cleaning up on Tesla. $13,000.
Mr. Chairman.
Hell yeah.
I would point out that candidate Trump did not run on implementing Project 2025. In fact, when he was asked on the campaign trail about Project 2025, he said, I don't know anything about that. Who are those people? And yet he early on and quickly installed a key architect of Project 2025, Russ Vought, as the head of the Office of Management and Budget, which we know is the command and control center for the budget overseeing all federal agencies. And that's what Elon Musk is doing now. He's implementing Project 2025, the same Project 2025 that candidate Trump said he knew nothing about. And he said that because he knew it was unpopular. He knew it would be unpopular to take the financial cop off the beat. And I want to start by talking about what's happening over at CFPB, the Consumer Financial Protection Bureau, because that is the
running
cop
into
on the
that
beat
support.
To go after
next
fraudsters and scammers who cheat
ran into
Americans
resistance.
out of their
Next
hard-earned
support
money.
is at 60.50.
And they have returned
if you're playing
billions of dollars
SPX, the
to
next
our
support
constituents,
is
the consumers
right
who are
here.
victims of these scams. And in doing so, they've earned some powerful
Price
enemies who want
support,
to shut them down.
option support.
And Elon Musk is doing that dirty work
On the SPY, it's roughly 603. The low 603 is the support if this trend line breaks.
About the richest man in the world shutting down an agency that helps victims of scammers and fraudsters recover just a little bit of their hard-earned money. And I find it especially interesting that the new self-declared head of the CFPB, Russell Vought, told employees not to come into the office and essentially to stop work. Here's what he wrote, and I'm quoting, "Employees should not come into the office unquote, and stand down from performing any work task, unquote. So this is an interesting situation. Federal employees continue to get paid, but the Trump administration tells them to stop doing their work. That apparently is what the Trump administration thinks is a good deal for the American taxpayer, to pay employees to not to do their job. So, Mr. Chairman, I have a simple question for you. Is that a practice that you pursue at the Fed, to pay your employees but tell them not to come to work? Have you done that?
No.
That wouldn't be very efficient, would it? No, it wouldn't. And yet, that's
Mag
what
7
the
puked.
so-called Doge boys,
Popping now
efficient boys
somehow,
are doing.
even though options aren't
In
doing
addition to that,
shit.
they're rummaging through the private, very personal, sensitive information of Americans at the Department of Treasury.
Price is
So
picking up,
it
but
seems
options
to
are
me
not
that
following
the
suit,
Trump
folks.
administration
This
and
little
Elon
pop
Musk
right here in
are
price.
focused on
Oh, there we go.
everything except what
There was options.
Donald Trump said he was going to focus on during the campaign, which was to bring prices down. And when you look at the price of eggs these days, I noticed that Waffle House just instituted a new 50-cent per egg surcharge.
Wait.
Due to the nation.
Quick question. Did they really think he would be able to bring down prices in less than a month of being president? Like, in their mind, they truly thought, oh, he said prices are coming down, has to happen day one. Like, do they really think that's how, like, markets and economies work? Like, that's a serious question.
Has restricted federal agencies from providing the public with information about the bird flu.
Cues are about to change trend.
Which is part of the cost of egg increases. So what we're really facing here is an administration that campaigned on bringing down prices and is not doing that, did not campaign on Project 2025, and that's what they're doing. But when it comes to prices, Mr. Chairman, the president's also talking about significant increases in tariffs. Our Republican colleagues are also talking about passing a tax bill that gives way disproportionately to the super wealthy, and which will add trillions to the deficit by their own account. They're talking about playing around with the baseline. So my question to you is simple. All things being equal, do big increases in tariffs and increasing the deficit and debt put upward pressure on inflation?
Dude, Tesla is getting murdered.
You know, it really does remain to be seen what tariff policies will be implemented, and I just think it would be unwise to speculate when we really don't know. I mean,
Mag 7 dropping, NASDAQ did drop, but getting a reversionary pop. Same thing with the SPY. Pop, drop, potentially popping again now.
The Fed took actions because they were concerned about the impact of increasing tariffs. Isn't that the case?
We wound up cutting rates.
15 second is just choppy. We had this nice algo buying, hit the upside gap fill at 11, 10:55, and since then just nothing. But watch for this crack here of this 1104.
Fiscal policy and regulatory policy, and those will all go into a mix, and we'll try to make sense of it and do what's right for monetary policy.
If you could just get back to me, I'm not on the question of increasing the deficit by trillions of dollars and what impact you believe that has on inflation and prices. Thank you, Mr. Chairman.
Yes, sir.
Price
Senator
trend
Lummis.
is bullish.
Thank you, Mr.
Tesla,
Chairman. And
dude.
Thanks, Chairman Powell, for being with us today. I think you're aware of what
16K and
direction
climbing on these puts.
they will be focused on the bank supervision function of the Fed.
That's a banger.
And I'd point out that when you and I were toddlers, 1956, the chairman of the Fed at the time, William McChesney Martin, said that the Federal Reserve Board is an agency of the Congress. Ben Bernanke said something similar in 2013 when he told Janet Yellen that, quote, Congress is our boss. Do you agree with that statement?
Yes, the way I always say it is that our supervision, our accountability runs through the legislative branch, not through the executive
Moving my
branch, which
stop
does
down to
many other
60.
forms of
It was up at like 75. I don't need this
thank
trend
you for
line
that,
anymore.
because I wouldn't
I'm short
have
at 33.
guessed that
Stop
that was
is
going to be your
at 60.
response.
Currently risking
The way that the Fed
26.5
has
points.
behaved for
It's
the
about
last 4 years in
$500,
its
but
relationship
slightly up right now,
with
effectively
the
break even.
US Congress is to thumb its nose at Congress. Your staff has repeatedly stymied information requests from this committee, notably made by myself, the chairman, the ranking member, Senator Tillis, former Senator Pat Toomey, and others. In my experience, the Fed is a black hole. It consumes information, but it never releases it. Your fellow governors have personally
I don't know why this alert's not
misled
working.
me on at least 2 occasions with respect to Wyoming and digital assets. And in recent federal court filings, former Senator Pat Toomey has accused your staff of lying to him while providing technical assistance on legislation that passed in the National Defense Authorization Act in 2022. Now, I have behind me a statement by the Fed's General Counsel, one of the staff that's sitting behind you today, who said, quote, the Fed generally
Mag 7 just started
resists
popping.
legislative prescriptions.
Probably people collecting on their Tesla puts,
Now,
if I had to guess.
That's thumbing his nose at Congress, the very
Yep,
people
right there. Called
that
it.
you and I just agreed you are responsible to.
People monetizing their puts. And actually, they bought some calls as well
on.
right there on Tesla.
So,
But after just
this
such
is
a
why the American people
banger
think there's a
betrayed,
deep
you have people
state.
locking
This is
in.
why they think there are faceless bureaucrats making policy
That's what this is. It's all
to hurt
monetization
the very
on
people
Tesla.
of this country. Just look at the mess the Fed made of Silicon Valley Bank. And I contend that there is a lack of understanding that is deliberate on the part of the Fed with respect to digital asset policy. So the Constitution says Congress is your boss, but somehow your staff have not gotten that message. So, Chairman Powell, do you commit on behalf of yourself and the Federal Reserve staff to comply fully with all document demands issued by this committee in a timely manner?
Sure.
Will you instruct your staff to be complete in their responses and not to obstruct the oversight functions of this committee?
You know, we always work with the committee to be responsive to your requests. Sometimes they're beyond our capacity to respond to, and we work with committee and with committee staff to do that. But we're always responsive to committee requests.
And I'll look forward to engaging with you when you feel that our requests are outside of the scope of the oversight that we have over the Fed. Do you commit to disciplining or removing any staff that are found to have engaged in debanking activity, furthering Operation Choke Point 2.0?
Mag
or other
7
misconduct?
potentially fonding? But really, this is
I
more
can't
monetization than
open a
anything else.
commitment to remove anybody, but I will tell you that I am struck, and my colleagues and I are struck by the growing number of cases of what appears to be debanking, and we're determined to take a fresh look at that. In fact, I took the thing that you showed during the debanking hearing. When I saw that, we're now taking that out of the manual. So I thank you for that.
Thank you, Mr. Chairman. My time's up.
Senator Smith.
Dude, we were watching
Thank you, Mr.
paint
Chair,
dry
Ranking
for the past
Member,
25
Thank you,
minutes.
Chair Powell, for being with us today. I appreciate your presence here. I'd like to start with the issue of the rising cost of home ownership,
Shit,
something
I'm
that
red
I
again.
know is of great interest to many of my colleagues. on this committee. I know, Mr. Chair, that you care a lot about homeownership and making homeownership accessible and available to folks. My colleagues,
Come
Senator
on,
Lummis
break
as
down,
well,
brother.
many of the folks
Break
on
down.
my side of the aisle as well. And so I think this is something that we can agree on, that the rising cost of homeownership is a big challenge for our constituents, for Americans. And
Come
one of the
on,
big pressures,
snap.
there are many, but one of the big pressures
21.
is the rising cost of home insurance. In Minnesota, families, seniors are struggling to manage a nearly 40% increase in home insurance
Spy's
rates.
trying to hold
We've
green
seen
on
this
the
over
day.
the last 7 years or so. And I know,
Cues are being
Chair Powell,
forced to
that you've
stay
told
red.
this committee in the past that rising cost of buying insurance for your home has been a source of inflation as we've been trying to manage inflation. Now, I don't know anyone who doesn't see this crisis of rising insurance rates as being caused by extreme weather events. We've seen massive flooding in southeastern United States. We've seen flooding in Minnesota. We've seen fires in the Mountain West in California. I mean, these are climate-related events. That's not a political position. That is just a fact. So, we've got banks that of course, require, understandably, that a homeowner provide insurance as a predicate for getting a mortgage. So there's a big question about what's going to happen when insurance becomes unaffordable, or in some parts of the country, just literally not available, and what impact that would have on the mortgage markets, on the value of American homes. Just last week, a new analysis from First Street
Tesla's
showed
now
that
going
overall,
again.
the value
Cues
of
are doing
US real
nothing.
estate could
Spy
be
is
reduced by
grinding to the
$1.4
upside.
trillion, colleagues, over the next
Nasdaq's
30
getting
years
hit.
due to
Mag
unaccounted
7
for
just fell.
climate
I
risk.
assume
That's the
people
cost, the
are
risk
getting out of their calls
of
on
not being able
Tesla,
to
maybe
afford
buying
home
more
insurance
puts.
because of these extreme weather events.
I don't like this grind
and
up.
The prospect of trillions of dollars of property become uninsurable is clearly a recipe, it seems to me, for market instability, both in the rental as well as the mortgage market. So my question, Chair Powell, is given these trends, how do you think the Fed and how do you think we should be thinking about the challenges that these events are going to pose to insurance markets and to the overall financial stability of the economy? I'm not asking you to comment specifically on climate change, because I understand my colleagues on the other side of the aisle see that as a political question. It's more like what you see as the risk to financial stability here.
So let me quickly note that we don't regulate or supervise insurance companies for the most part, but we're seeing the same thing, which is both banks and insurance companies are pulling out of areas, coastal areas and things like that, or areas where there are a lot of fires. So what that is going to mean is that, if you fast forward
Spy options stalling out in the very short. Nope, never mind.
You can't get
Not
a
stalling
mortgage,
out.
there won't
Popping.
be ATMs. There won't, the banks won't have branches and things like that.
Right.
That's a possibility coming up down the road. It's not that the banks will stay there and
Feels
keep
like
making loans.
the queues are being kept down by Tesla,
events of
and then
disaster,
Apple's
or the
keeping the
insurance
Spy up.
companies will do right policies. They can cancel those policies every year.
Right.
So I think the risk is that they just won't be there and that people won't be able to get them. That's really the issue.
And it seems to me that that would be a massive source of instability in our economy overall if you were to see that kind of dramatic decline
Tesla is
in
just getting
ownership,
the fuck beat out
home
of it.
values. Not to mention the disruption that would occur if people literally couldn't be in their homes
Nasdaq
So I
at the
think it's
lowest
gonna
reading
fall.
of the
If
day.
that happens, it'll fall
And
on
now even
homeowners
the
and
Spy is giving
residents, but
some
it'll
back
also
of this
fall on
pop.
state and
If
local
this
governments.
delta is taken out, this low that we
what you
saw
see
at,
happening now, where
I
they're
don't know,
stepping in
11,
states where
13,
insurance
if these
is
delta lows are taken
going
out,
away,
I'm
private
looking for
insurance, you're
this,
seeing
the
states step in
SPX
because
to
they
peak back
want
to
those areas
60,
to remain
50.
prosperous.
That's my
So
game plan.
I don't know that it's a
If we
financial
snap
stability
this
issue, but it certainly
6063
will have significant
and
economic
the
consequences.
delta drops below
to try to
what we
figure out
saw
how to
right
provide
here, if
reinsurance
those
as
two
an
things
example,
happen,
in the
I'm then
in
looking
places
for
where,
the 15-point
commercial
puke
insurance
down
isn't
to this
available would be a
region, 10-point
massive
puke.
impact on state budgets, if to follow your chain of thinking. And I know in this committee, I've heard some of my colleagues on both sides of the aisle talk about the challenges overall with flood insurance, just as an example, and the massive expense that would have for us as well. I raise this, colleagues, because I think that this is an important issue that we need to be paying attention to. I do think it has a fundamental impact on the overall health of our economy as we look not even down the road, but where we are right now. So I'm out of time. Thank you, Chair Powell. I have a question. You and I have talked quite frequently about my deep and keen interest in the Community Reinvestment Act, and I'll follow up with a question on that for the record.
Thank you. Thank you, Senator Smith. Senator Haggerty.
Thank you, Chairman Scott. Chairman Powell, it's good to see you here today. Welcome. I want to start by talking to you a bit about markets and inflation. Less than 6 months ago, you expressed some serious concerns about labor market weakness and the risk of persistent inflation. But since then, the FOMC has begun its easing cycle and cut its target rate by 100 basis points, as you mentioned in your opening remarks. Now in the January meeting, the FOMC has telegraphed that it felt both the labor market and inflation have reached a point where you're comfortable maintaining its target range. And my question is this: the recent market data, including last week's strong jobs report, indicate that the economy is on firm ground. Indeed, swaps markets have begun to price in fewer and fewer cuts this year. And I just wanted to talk broadly about these market conditions that you see. Do you see evidence of a higher neutral rate emerging at this point?
Yes. I mean, let me say there was a lot of reason to be concerned about downside risk in the labor market toward the middle of this year, but really that concern has diminished significantly. Labor market's very strong. I think the evidence is my own
Mag
view,
7
and
popping,
there are many different views on
NASDAQ hitting a low, bouncing off of it. SPY
it
just started to puke, like I said.
From what it was,
I'm looking for the break of 63 and simultaneously for the options delta to take out these lows right here.
I think it's moved up.
That we saw at 10, 11, 14, excuse me.
It certainly seems that way. I'd like to turn now to what seems to be a very popular topic right at this point, and that's the CFPB. In your response to Senator Britt's question earlier, you confirmed that
Things
when the
are
CFPB
going to get exciting here,
funding
team.
requests,
Right here. Watch
the
the
Fed is
snap
not
of
in a position to
63.
exercise any discretion over what the funds are used for. Is that correct?
As long as it's compliant with the law.
It just strikes me that the Fed is not in a position to hold the CFPB accountable for what it does or how it spends its money. Congress hasn't been allowed to hold the CFPB accountable for what it does or how it spends its money.
Step one. What about step two? Almost. As soon as this delta
accountable,
snaps.
At all. And now I hear, complaints
I'm moving
coming
my
from
stop
every
to
corner, particularly from the other
55.
side. Complaints
I'm
about
short
the
at
excessive
33.
delegation
Stop
of
is now at
authority
55.
to a Republican CFPB director when this entity was intentionally created to be wholly unresponsive to elected officials. So I just
waiting for the delta to break
Before
here.
I close, I'd like to come to
We got the price, bounced off of it on attempt one.
and particularly,
like I said,
the Fed's forays
just
into
waiting for the
climate
delta
activism that
to
have taken place
actually
over these
break
past 4
this.
years and the recent retrenchment that we've seen. It's one thing for the Fed to disassociate from its past climate activism in a press release, but to credibly claim that it's divorced itself from partisan climate policies, the Fed needs to do more than just issue statements. It needs to actually end its climate policies. The Fed's independence from politics is a headline topic at the moment, of course, and while much attention has been given to potential external pressures on the Fed, I think it's also critical that we scrutinize how the Fed's own regulation and supervision might be utilized to in some way politicize the institution. So when the central bank strays from its mandate by embracing partisan climate policies, the Fed embroils itself in controversial political debates and invites legitimate political scrutiny. So I just want to urge the Fed to refocus entirely on its core statutory mandates. I know it's a commitment that both you and I share, Mr. Chairman. Thank you for being here with us today.
Thank you.
Thank you.
Thank you.
Senator Warnock.
Thank you very much, Chairman Scott, and welcome again, Chairman Powell. I want to echo the words of Ranking Member Warren and so many of my colleagues today on DOGE and Project 2025.
We're right at the bottom here.
Attack on the Consumer Financial Protection Bureau. Certainly the Bureau was not created to be dismantled. And since its inception, the CFPB has been the only federal agency solely dedicated to protecting Americans' wallets and pocketbooks from scammers and predatory companies in financial services. The CFPB reduced costs for Americans, returning more than $21 billion to Americans who have been cheated since its inception. I want us to focus on that as Folks are talking about chasing after waste and fraud and abuse. The CFPB
A little bit of a reversion.
$21
Is it
billion,
being faded, though?
to Americans. Make no mistake, this attack
Options are indecisive. Watching price. Like I'm saying, watch the snap is 63 and more. Simultaneously, you want the delta to also snap. Price and delta.
And so, Chairman Powell, thousands of Georgians of all political
Here we
stripes
go.
have written into my office.
Come on,
And they are
snap it.
alarmed by an unelected billionaire and his hacksters' dangerous attempts to
Come
access
on.
Americans' private data.
Come on,
and the Treasury
Tonto.
Department's systems that control $6 trillion in annual payments to millions of American citizens, including Social Security, Medicare, and tax refunds. Quickly, yes or no, has Elon Musk or members of his team, to your knowledge, attempted to access the Fed's protected data and systems? Yes or no?
I don't
To your
believe so.
knowledge.
I don't believe so.
Okay, so will you commit to report to this committee, majority and minority, immediately should you become aware of any such attempt by Elon Musk or Doge to pierce the Fed's independence or to access its protected systems?
Yes.
Thank you for that commitment. The Fed's latest monetary policy report states that the tight labor market has allowed employment and earnings gaps between Black and Hispanic Americans and white Americans to narrow. I was glad to see that many of the long-standing disparities in employment and wages
Double
by
bottom
sex,
thus far,
race,
saving itself.
ethnicity, and education have narrowed under the Biden administration. Some gaps have reached historic lows. Specifically, the employment gap for Black workers and white workers is near its lowest point in almost 50 years. That is the economy that the Trump administration is inheriting, a historic low in almost 50 years. Chair Powell, as you work to promote maximum employment,
Options
what
picking
steps
up a
will
little
the
bit on the
Fed
SPY
take
off this
to ensure
potential
that
double
these
bottom
equity
outlaying
gains are
at
permanent?
63. We tapped it,
The
we
best
bounced,
thing
we
we can
retested it.
is
That's
to
simultaneously
dispose of
happening
our
now with the
mandates,
options
really, because
upswinging.
As you well know, high inflation hits people at the low end of the income spectrum first and most. And in addition to that, we know that the benefits of a strong labor market over time can be.
Let's see who's going to
really
blink
visible
first.
And important in those communities as well. So we pursue our mandate. We keep our heads down, and it works out that is the single best thing we can do to foster, closing those gaps.
You pursue your mandate. You want to make sure that it's working. Would you agree that we still need good equity data to continue to narrow and close those gaps by race and gender?
I do think we're always going to be in favor of good data at the Fed, and we do have quite a bit of that data on our website.
But if we don't have equity data, it'd be difficult to know, right?
Yes.
I'm glad to hear you still believe in the value of good equity data for economic policy making. It's better to fly with the data than to fly blind. I'm not sure what's so controversial about the data. And while I was disappointed to hear that the Federal Reserve, which is independent from the White House, it scrubbed a diversity and inclusion section from its website after President Trump's executive order, while also scrubbing data on the racial, ethnic, and gender makeup of its economists and researchers. I hope you will continue to ensure that the public has good data on how our economy is working or not working for historically
Tesla's diving again,
Americans.
almost at an intraday low.
You will reconsider.
Apple's trying to hold on. Apple is apparently the reason why we're not really puking yet.
Think about the value of protecting data on the black-white wealth gap or employment gap. I think it's important to understand what
Nasdaq's at the lowest.
can learn from this data.
SPY just got hit.
From what you've seen in the data historically, what types of economic events have caused the black-white wealth gap or employment gap?
I'm actually surprised price is holding this well. I mean, the Mag 7 got just nerfed.
Generally,
dead cat bounce, already selling off. Nasdaq's at the lowest of the day. The SPY bounced, tried to save itself, got hit.
When it goes up, it goes up faster.
This is the third test. I'm
There is
dumbfounded that it's saved itself.
And we want to
actually it's bouncing. Wow.
Strong labor market.
Wow, it made a new low. The third test it saved itself. That's crazy.
Overall labor market conditions.
That close to
maximum
the puke.
employment, but one of the benefits of that is that
That freaking close. That blows
Thank you
my
so much.
mind.
We all know that fully deregulating our financial regulators, like the CFPB, firing bank examiners,
That's
and the FDIC,
insane. One,
weakening the Fed's
bounce
supervisory
two,
capacity
dead
makes an
cat,
economic shock or
and then
recession
save itself.
more
That's
likely. We know that this
insane.
disproportionately impacts Black and Hispanic.
And yet prices going up,
workers,
but options don't care.
and there are real
I think this
consequences
pop
to
right here is
weakening and
bullshit.
eliminating
Look at
financial regulations
the
to
SPY
keep us
does
safe.
not care.
Working people are the ones especially who suffer. So thank you so much. And I look forward
NASDAQ
to
does not
continuing
care.
to work with you
Mag 7
closely.
does not care. As of this moment, there's a little bounce right here.
Thank you for presenting your report
Like
to the
just
committee
the
today and
smallest
for
of
coming to meet with
bounces
me last week
in
my
options.
office as well. The Federal Reserve has
Options
enormous
market does
power
not
over
agree with
Americans'
this. What,
ability to
3-point
work
bounce
and
to
earn a
30
living.
cents on the SPY?
And the Fed's interest
They
rate
might end up
decisions have
buying,
an
but as
especially
of
big
right
impact
now,
on
they don't
industries like
agree.
manufacturing, which depend on big investments. Chair Powell, the Fed's data on manufacturing is
Whoa.
still holding up nationally, but it doesn't look very good in the Chicago region, which includes most of my state in Indiana.
Apple popping
The
again.
beige
It's
book
Apple,
says
dude.
manufacturing jobs
Apple's
are
keeping the
declining
market
and fewer people are
alive
buying
right now.
manufactured products. It also says that steel demand is at a low level, auto production has slowed, and machinery
Dude, Apple
orders are
is
down.
dominant.
What does that say about the rest of the
If
country?
Apple weren't doing
When
this today,
manufacturing in
the whole
heartland
market would be in
slows,
trouble.
does that signal
Whole
trouble for
market would
industries
be
in other parts
in
of the country?
serious trouble.
It can. It doesn't always, but it certainly can. We watch the manufacturing sector. It's very important. Manufacturing
Delayed
jobs
reacts,
tend
but
to be
now we
high
just started
productivity
popping.
jobs. They're very important in our
Right
economy.
here.
But I would say over the last couple of years, manufacturing was
Will
pretty
it hold?
weak during
It overshot it, took out this recent high,
years
but
in
are
which
we
we
just
had high
going to
GDP
test it a fourth
overall.
time?
Manufacturing's a
It's just
smaller
getting pinned to
proportion
that
of the
closing
economy than
value
it
from
used to be.
yesterday.
It's still extremely important.
Senator Reid asked you why free trade doesn't work when one of the giant players doesn't abide by the rules. The China shock is proof of that. The Fed has a mandate to maximize employment. How do you account for the whole industry that is repeatedly suffocated by unfair competition?
Wow,
we don't do trade policy.
This
We're
bounce
not
right here
responsible for it.
is
We don't
blowing my
comment on
mind.
those who do trade policy.
I thought
So,
this was
but,
done.
you know, we're,
Overshooting, fake out.
So we don't
dead.
really have a role in focusing specifically
This
on
the market
that.
barely
So that
saved
really is
itself
left
right
to
here.
Those who have responsibility over trade.
Do you agree that a healthy manufacturing economy is important to a healthy overall U.S. economy, though?
I do.
I hope you had an opportunity to read Robert Lighthizer February 6th essay in the New York Times. He explained why
Tesla
a big
fresh
trade
low.
imbalance between any two countries is harmful to citizens in both of those
16.5K and
How does the
counting,
Fed
up
take the trade deficit into
157%.
account
This
in your
is
decision-making?
cruising for me.
And we really don't. You know, we're aware of it, but
Cruising
it's not
for
something
me.
that directly affects our mandate goals.
12K alone today. I've been swinging it for
I
a
did
couple
read his
days,
book,
though.
by the way. I didn't read that editorial.
Fair enough. It is a good book as well. I want to get into
All right.
tariffs. It's no secret that most
Struggling to
conventional
hold
economists
green?
hate tariffs. But I want to note that Indiana gained manufacturing jobs during President Trump's first term with the 2018-2019 tariffs. Even though the
Options
economist's
flow
conventional
turning
wisdom is that
over.
tariffs will reduce
NASDAQ
jobs,
lowest
do you
reading of the
commit to
day.
following the
Mag
data and not
7
prejudge any outcome?
Very much so. As we
near
did,
its
in
lowest of the day.
2018-19.
Mag 7's kind of flat, though.
Finally, my staff reviewed the research paper on tariffs in preparation for this hearing, and I want to point out one of them called The Employment Consequences of U.S. Trade Wars. Mr. Chairman, I'd like to enter this paper for the record. It found that the timing of tariffs are very important. It found that China's retaliation to President Trump's tariffs did hurt U.S. jobs, but if the U.S. had imposed tariffs on China much earlier in the 90s and early 2000s, it would have almost completely eliminated job losses due to the China shock. And I know you've said what you said before, but will you and your staff please take a look at this paper?
We certainly will. I imagine we already have, but I'd love to see it.
I appreciate that. Home ownership is an essential part of the American dream, but families are struggling to afford homes. In just 5 years, the price of a typical home in Indiana has gone up more than 60%. More than 3/4 of American families can't afford an average home in their neighborhood. How do the Fed decisions about monetary policy affect the ability of regular families to buy a home?
Most of what will have driven that increase will be about some of it's about local regulation as you, I'm sure, know. It's also about just wages going up and costs of materials and things like that going up. And land costs and all that are going up a lot. The channel that through which we affect housing is, of course, interest rates. And right now, interest rates are still pretty high, but actually, mortgage rates are really not set at the Fed. Those are really key off of longer run things. Nonetheless, we're clearly having an effect on the housing market, and that'll unwind as we normalize policy. But we're still going to be faced with high insurance costs,
Options back to being
flat,
flat,
and
NASDAQ
and all the things
just
that
hanging out at the low. Mag 7 almost vomited to a new low, getting a little bit of a bounce right here. But what's happening is just the S&P 500, the SPX, the actual index is just getting pinned to the close value. Like this is literally the red-green move. We're just getting pinned there. Nothing's happening.
From 2010 to 2022, rents in Arizona increased by 72%, and I wish wages.
Man, I really thought this 1140, the 1130. I thought that was it. I truly did.
% for nearly 30 months.
Third save. That's crazy.
Anticipated in the near future, potential cost
options were diving right here. They were diving hard, and look at they just pulled themselves right out of it. That's just nuts.
From California and labor shortages, what do you think needs to happen to make housing more affordable in Arizona and the United States in general?
You know, housing policy and things to help housing supply are really in your wheelhouse, not ours. I do think, you know, the housing markets around the country are still suffering from the after effects of the pandemic. Once that's all the way through and short-term rates are down to normal, whatever the new normal level is, I think housing costs are still going to be high. I think it's still going to be expensive to build housing in many parts of the country where lots of the urban areas, the obvious places to build housing has happened. So I think it's a long-term. There's a short-term problem which will go away in coming years, but there's a longer-term problem with housing availability, and that's going to be something that
what the fuck is going on here?
Our authorities or power to affect.
Some call buying is happening.
One of the things that
a small amount.
In Arizona is because we have people that are locked into mortgages at 2.9, 2.8%.
It's like nothing.
And
honestly,
in order for them to move to the new house, they're going to have to essentially go and try to get quote unquote a bigger house, but the mortgage payment is going to be through the roof. And while I know the Fed doesn't set the mortgage rate, at the same time, one of the biggest drivers, obviously, of inflation, especially in places like Arizona, is housing
ever since
costs.
11,
one of the biggest decisions
nothing.
Essentially you make on whether or not to move rates is inflation, which is driven by housing costs. So we're in this kind of perpetual vicious circle in Arizona when it comes to interest rates. So I don't know what the answer to that is, but I just want to say at least for there to
just
be
waiting for this to get rugged.
It's the reason we're not breaking out of this cycle is because the problem kind of feeds itself over and over and over again.
Yes, that's exactly what's going on. But it's not obvious, though, that lower rates would lead to lower housing inflation because, of course, that would increase housing demand. It would unlock
options slowly grinding up for the S&P 500 complex.
Both a buyer and a seller. So it's not clear that
Tesla looks weak, Apple looks strong, Qs are stuck, SPY is basically stuck. They're both being pinned to the close from yesterday.
By increasing
this was the bearish play of the day. This was the bullish play of the day. Bearish on Tesla, bullish on Apple. Those were the major plays of the day.
Will start moving and essentially bring down the overall cost. But moving on, so I've also heard from businesses in Arizona, they're concerned about the threat of economic stability in tariffs that are imposed on our key U.S. trade partners. How should we expect prices to move for basic items like tomatoes, peppers, cars, and the like if we place a 25% tariff on Mexico next month, as the president has threatened?
So, as you know, we don't do tariff policy and we don't do commentary on tariff policy. I mean, just generally. When somebody's got to pay the tariff, and it can be the exporter, it can be the importer, it can be a middleman, and it can be the consumer.
For it, though.
Somebody does, but you know, in some cases it doesn't reach the consumer much. In some cases it does, and it really does depend on facts that we haven't seen yet.
But that also contributes to some of the calculations on inflation overall.
It can, but
it's hard to predict.
There's a question of how persistent that would be and how large it would be.
Mm-hmm. So, and of course, I understand you're not here to specifically comment on trade policy, but overall, is it your opinion, let's just say a base opinion, that high tariffs can lead to higher costs, which would then end up being seen in terms of your inflation calculation that helps you set the rates?
So I'd say that's a possible outcome, which will depend very much on specific facts about what's being tariffed for how long, et cetera.
Okay. Thank you. I yield back.
Senator McCormick.
Thank you, Chairman Scott, and Chairman Powell, good to see you again. In the past 5 years alone, the national debt has exploded. Federal spending and the debt have increased by more than 50%. Debt held by the public, or true debt obligation, has more than tripled during the past 15 years, reaching more than $28 trillion. All told, U.S. national debt is now over 120% of our GDP. And runaway spending contributed to a regressive tax on all Americans, a tax known as inflation. In the past 5 years, the cost of living has skyrocketed for working-class Pennsylvanians, especially as you and I discussed when we visited.
Come on, just break down.
Fixed incomes, and unfortunately, that compounded effect of inflation has not been offset by commensurate rise in wages for many Pennsylvanians. I've heard from countless Pennsylvanians who had to count their dollars at the gas pump, cancel family trips, even tighten their belts at the dinner table because of inflation. So while we discuss these heady issues, let's not lose sight of the very real human cost of the decisions made by people sitting in this room. And given that cost, I'd like to ask you about the national debt and the cost of financing it. We now spend more to service the debt annually than we do on national defense. So how concerned are you about the accelerating pace of government borrowing and the borrowing cost, which will
I'm
affect
still in this
families
short, by the
in
way. I see someone
form of higher
asking.
mortgage rates?
I was good, then I took some
We
heat,
don't comment
now
on
I'm good
fiscal
again.
policy, other than to say that, as my predecessors have said,
I'm just
that
looking for this
the
breakdown
US
of 800,
budget
and
is
as
on
soon
an
as we get
unsustainable
that, I'm
path.
going
It's
to move
not
my
that the
stop to
level
break
of
even, then
spending
I have a
or the level
lottery
of the
ticket.
debt itself is unsustainable. It's that the path is unsustainable, and ultimately the level of the debt will be. So
lower highs and lower lows
there's no time
confirmed
like
on the
present to start
NASDAQ,
working
and we're
on this. The longer
about to
we
get
wait, the more
another
painful
test
it
here
will
on the
be.
SPY. The
Something we
exact
need to
same
do
level
and
I've been
will have
telling
to
you
do
about.
in
The
the
major
long run. In
thing
the short
is
run,
watch
it's better
for
in
the
the long run
options to either
And
stabilize
just as
or
a
to actually
practical
keep
matter, how do you
dropping.
factor that into your policy thinking and decisions?
We don't.
Yep, we're dropping.
We're here to achieve
All right, this
maximum
is the
employment and
fourth
price
test of
stability.
this level.
And,
If we
it's
see
really up to
options
Congress
continue to show
deal with
bearishness,
fiscal
in
issues.
my book,
And,
the way I would play
we
it
leave that
is
to
I
the
would
committee.
increase my confidence of a retest of this level right here.
Falls clearly in your bailiwick.
I'm looking for a test of this if it
Because
can
of that
actually
national
hold
debt,
and we don't see
it's
buyers
caused the
magically
supply of
come
US
in.
Treasuries needed to finance the debt to skyrocket.
Looking decent.
That's at
I'm
the
up
same time
500.
the Fed is shrinking its holdings of Treasury through quantitative
I'm just
tightening.
looking for a snap
So
here.
the question is, or could you at least give us some insight into the impact that this is having on the Treasury market as investors must absorb that supply? And in particular, I'm interested in how the biggest holders of U.S. Treasuries, how their behavior is changing as debt increases.
So this is a real Treasury question, but I think from our standpoint, I can say that there are lots of buyers for Treasuries, but
Come on, just puke.
Treasury buyers are going to be
Just
factoring in their
puke.
assessments of the supply that's coming, and that may be part of the reason why the term premium has increased, as you know, over the course of this year. Although the rates have been going up and down lately, they're almost back to where they were before the election.
I know the Fed has been moving forward with comprehensive changes to the stress test process. Could you discuss how you're thinking about reducing the volatility of the results and increasing transparency on the stress test?
So on transparency, we're going to release the models, clean them up and publish the models, put them out for comment. And in terms of volatility, we're also going to
Time to put on the red glasses,
stress
folks.
test scenarios.
We're looking for that puke.
Before we
We're
implement
looking
them.
for the old
In terms of
bloodbath.
volatility, what we said we would do is average the changes to, the problem is the stress capital buffer can be moving up and down just because of volatility in the results. And it seemed like a good idea to smooth that out by averaging over a couple of years. We're putting all this out for comment, though, and ultimately we'll reflect those comments in the final decisions we make.
Thank you. I'll yield back my time.
Thank you, Senator McCormick. Senator Blunt Rochester.
Puke.
Thank you,
Puke.
Chair and
Puke.
Ranking Member, and thank you, Chairman Powell. It's good to see you, and thank you for meeting with me last week. We discussed everything from jobs and housing supply to the real impact on Fed policies on all of our lives. And I also got a chance to share with you just the concerns and consternation of Delawareans who, for the past few weeks, have been frightened by firings and funding freezes, and just the real impact on people's financial and personal data and information when, DOGE has access to this information.
All right, we might be bouncing off
I'm hearing
800.
from my constituents as well about the potential shuttering of the Consumer Financial Protection Bureau. As Senator Warnock mentioned, CFPB has returned over $21 billion
Lottery
to
ticket
millions
time.
of consumers, and that's a real impact. But I want to also
Stop loss
highlight
is now
that
at break even. Worst case
your
scenario
leadership
is I
in the
just make
Fed,
no money.
working
He
with
does it
Congress,
again, folks.
and the Biden
The
administration
hottest finance streamer
really
on
help
this side
answer
of the
that question that
Mississippi.
you were asked about if you had the choice to switch countries
He
with
does it
France
again.
and
He
Germany
does it
and
again.
others, that you said no.
I have a
You'd
reach
rather be
target
here,
of
and that success is a testament
2158 because that's 1,500 where I'm
during a
maxed
really
out
tough
on the
economic
day. But
time,
if it turns earlier, I'll just get out
end of
earlier.
this during a pandemic, and it limited the recession and job losses. And since COVID, we've seen a robust job growth. But we also have grappled with inflation that drove prices up for so many goods. And I've worked to address one part of this phenomenon, our supply chain disruptions. In fact, I recently joined Senators Cantwell and Blackburn to reintroduce the bipartisan Promoting Resilient Supply Chains Act to address supply chain vulnerabilities. And while we see indications that inflation may be slowing, too many of our constituents are still facing high prices and economic uncertainty. We need to do everything that we can to address this anxiety and the realities that Americans are facing. And there seems to be a disconnect. While the economy is doing, well here, on the ground, people aren't really feeling that. So, Mr. Powell, can you talk about, from your perspective, just what is driving this disconnect between traditional economic indicators, such as GDP growth and the stock market performance, and the tangible benefits for families?
I'd be glad to. So it is clear that the overall aggregate numbers are just very, very good for the economy. 4% unemployment, inflation down to 2.6% last year, and the economy growing.
All right, this is VWAP. I'm worried about a bounce off of this.
But what people are feeling is the results of several years of inflation, and particularly for people in the low and moderate income category, they're really feeling it. So if you look at the earnings releases and press conferences that they do, that companies like the dollar stores and things like that do, who deal a lot with low and moderate income people, they're all telling you that those consumers are feeling really strapped. So we do understand that, and we try to keep that in mind, even though we acknowledge that the overall data are good. We see what people are feeling, and that's inflation. So it's just another reminder how much people hate inflation and how bad inflation is for people, high inflation. And, it just furthers our resolve to get inflation back to 2% and keep it there.
Thank you. One of the big areas that I focus on, you've heard many of us across the aisle talk about the housing crisis that we have in this country. And I know a few others have asked questions previous to me about this, but I would love to follow up afterwards with specifically what you think are the short-term and long-term things that we can do to really address the housing supply and affordability crisis. I have legislation that looks at things like reducing regulatory barriers, zoning reform, these things that we know we can, in partnership with local governments, make a significant difference. And so if I could, would love, again, to follow up with you, even cutting red tape. those kinds of things that we can do long-term and short-term. But I did want to mention one last thing in the 20 seconds that I have. The Fed listens, things that you do, activities that you do. Could you talk a little bit about that as well? Because working people, a lot of times people don't feel that they have a place in these kind of conversations. But can you talk about what the Fed does with Fed listens?
So briefly, we did this as part of our review 5 years ago, and we do it on an ongoing basis now. And the idea is that we break out from the usual people that we talk to, which is a pretty diverse group, and try to deal directly with people who are experiencing the economy and our policies. And it's quite eye-opening to listen to people talk about it. We had one person at the Chicago conference 5 years ago who said the expansion, which was then 9 years old, is just reaching my community. And he talked for some minutes about how companies were going into prisons and finding people who weren't going to get out for a year or two and training them and stuff like that. You could hear a pin drop. It was very telling stuff. So I think we learned from all that. And so we'll keep doing it.
Well, we're literally just holding VWAP right now. This is acting as support.
It's Martin Luther King. We may have come over on different ships, but we're all in the same boat now. We need to get
moving my stop
to
13 points in the money. So no matter what, I'm making $250.
Chairman, thank you for being here. Thank you for taking the time on the phone the other day. Appreciate that very much. Just to ask you a broad general question. When you increase M2, the money supply, by 40% over a short period of time, is that going to drive inflation?
It could. Well, as I think we discussed, monetary aggregates have not been a great predictor of really any other thing. But I think when there's a
SPY somehow bouncing back,
M2, then that could, that's something that might cause some inflation.
Now, is that just to be clear for the people watching? That happened because of public policy in this institution here, correct? In other words, there wasn't a civilian-led effort to increase government spending outside of the elected leaders that chose to make those decisions.
I think that was part of it. I think there were just a lot of causes in the inflation that we saw. But
what's going on?
It's fiscal policy.
What was that? What was that pop?
It was just closing and reopening the economy.
Big flow alert right here. You can see the volume spike. Seems temporary in my book.
A lot of inflation everywhere in the world, really.
Because honestly, as that happened in the SPY,
but there were many factors, and
is that real data?
But just to be clear, it wasn't the citizens.
Am I getting delayed data?
Decisions. Those were elected leaders choosing
the
to close
SPY
the economy.
popped.
Businesses didn't decide one
but
day.
But the
to close.
S&P 500 isn't.
Not be able to go to work. Those were decisions made by policymakers. Correct.
Is anyone else seeing this?
So it's a little disingenuous.
Am I losing my fucking mind?
Hear my colleagues talk about how they care so much about inflation when in reality they cause it. But I don't want to continue that. I'd ask you a question just out of curiosity.
I think this is a misprint, folks.
At what point did you think they were going to run out of ink? Did that concern you that maybe it was possible?
I think this little wick to the downside didn't actually happen. Not seeing it on SPX.
Ink suppliers?
Didn't occur to me, but good question.
So along those lines, something that concerns me a lot is the idea that we would even look like China in any way. So can I have your commitment that as long as you're the chairman of the Federal Reserve System, that we will never have a central bank digital currency?
Yes.
Thank you.
Yes.
I think that's extremely important. It makes me very happy to hear you say that. Shifting gears to a little bit, something that matters to me and entrepreneurs all over the country is why can't I wire somebody money at 6 p.m. Eastern time?
Hell yeah, brother.
We get to a 24/7 scenario where wires are cleared.
Dude, I am cooking.
Every day, all day. I think
I'm up a lot of money.
Very, very helpful to businesses.
Up 1,000.
So that's coming. It's just coming slowly here. We have that at Fed now. We'll get in touch with you about Fed.
I'm moving my target up
between
63.
Banks.
Come on,
hit it.
Hit it. Hit it. Hit it. Money. Go. Fucking go. Go. Go.
I know I don't want to put you on the spot.
Go,
but to put you on the spot,
send the market down.
It's Fed now. I was very familiar with it, but it was a little bit.
Do it, buddy.
Can we get a commitment to do that this year, so that by the end of this calendar year,
do it.
Businesses can transact 24/7 and set up
it.
Well, I think they
do it. Do it. Fucking do it, pal. End it.
RTP.
End it. Bring it the fuck down. Go, pal. Pal. No.
Let me check in.
No.
I'll follow.
No.
That'd be great.
No.
One other piece of the puzzle here is what do you think the Fed can do to fight international terror groups? For example, Hamas, Hezbollah, Iran, the proxies that are funded by places like Qatar. Do you think that we're doing enough to keep them outside of the banking system? Because
Orders
at the end
canceled.
of the day, terrorism is ultimately
Bada bing, bada boom,
by these
plus
bad actors.
30K.
I met with the hostage families this morning. It was heart-wrenching to hear stories about kids that are my kids' age being held for almost 500 days. The Qataris are obviously completely complicit in all this. What can we do? What advice would you have that we can do to make certain that we bring these terror groups to their knees?
You know, we do enforce the money laundering laws very, very strictly. And
For all the kids at home skipping school today, this is what dreams are made of. This is what fucking dreams are made of.
Meetings and things like that. But you're right. It's really hard to nail it down, particularly if it's all happening overseas. But we can do what we can do with our banks. We don't want to make it so costly, though, that they debank people because they're so worried about it.
Seriously, what other guru furu was telling you this pump was fake? Which other guru furu was giving you the odds of the market today, telling you, nah, dude, I read this market like a fucking book, like a goddamn book. Seriously, I called it out before the market opened, when the market was opening, during the pump. I gave you the play-by-play, folks. Fucking don't at me.
Thank you, Senator Marino. The patient and persistent Senator Kim.
Thank you. I wanted to make sure some of my colleagues had a chance to be able to run off to some of their meetings. And I've enjoyed being able to listen to the chairman, to be able to hear some of your articulation here. I just want to share with you, I did a telephone town hall last night, and I'm glad to hear some of my other colleagues as well. And there is a lot of anxiety right now by the American people in trying to understand what's happening and seeing and interpreting what's happening on the news. I guess I just wanted to ask you, if you were, for your words of how you would explain to the American people the importance of independence when it comes to the Federal Reserve.
So I think the point is that we'll make better policy, we'll keep inflation lower if we just focus on doing our job and stay out of politics.
Dude, you're obnoxious.
Stay out of elections,
Chris.
Don't try to favor or to
I think you
hurt
mean rich.
any political party, any political figure. Just focus on the data.
Rich. You're spelling it wrong, Chris.
We'll be less effective.
Not obnoxious. Rich.
And, you know,
it ends with an R-I-C-H.
I think there's broad support up here. And
you should learn how to spell right.
Political parties and on both sides of the hill. I think that there is a decent degree of support for continued independence. That's not to say we shouldn't be accountable. We should be very accountable and transparent about what we do. We should be up here explaining what we do and why to our oversight body, which is this committee and then the same committee on the House side. So that's what I would say.
Making decisions about your core mission about stability and about growth, but not thinking about it in terms of the context of an election cycle, for instance. Is that right?
Yes, exactly.
I wanted to just shift gears a little bit, but similar type topic. You know, there's been a lot of attention to the role of public servants within our government and, our understanding what roles they play, how many to have. And I guess I just wanted to ask if you could speak to the role of the Federal Reserve employees, their qualifications, and more importantly, like their importance to the mission and being able to engage. How important are they to the work that you are trying to do towards stability and growth?
So I'm very proud to be associated with the people of the Federal Reserve, and I'll give you an example why. When the pandemic hit, kind of out of the blue, and economies all over the world are shutting down, the U.S. Treasury market is stopping to function. Companies can't roll over their commercial paper. Economists are writing about a depression. People at the Fed who went through the global financial crisis 10 years before step forward and say, we got this. We know what to do. Here's what we do with the Treasury market. Here's what we do with money market funds. Here's what we do with the companies that can't get any financing. The markets were closed, and companies were having maturing debt that they had to roll over. the people who knew what to do in that pretty dire emergency were working at the Federal Reserve and other places. But I will tell you, it was impressive. And I think if you could have seen the way people react and you know, how hard they work and how much they know and how well it worked, really. Our work during the acute phase of the crisis was very successful. And it's entirely due to the knowledge base that resides with career people at the Fed.
Yeah. Would you say that the Fed is overstaffed?
No, I would say that, you know, overworked, maybe not overstaffed. Everybody at the Fed works really hard. It's a place where people work.
And a lot of this conversation right now about staffing numbers at different departments and agencies, you know, it's going back to this sense of the taxpayer dollar, you know, in terms of accountability there. But I guess I just wanted to ask you, is the Fed paid for by the taxpayer dollars? Can you explain to us what the burden is on the taxpayer?
So we're self-funding through our large balance sheet.
So when it
Or
comes
a
to the
large
staffing
balance
at
sheet.
the Federal Reserve not coming
Has
from
to
the
clarify
taxpayers,
he's
is that
rich
right?
as fuck.
You know, indirectly, we give away all of our profits. We give back to Treasury, and those profits would be higher if we didn't pay for the Fed. So, in fairness, it does ultimately come. It's ultimately paid for by the taxpayer. But in that sense, we're self-funded.
Self-funded.
Yeah.
Just one last question here. You talked about the different actors that are involved when it comes to levying tariffs in terms of paying that the exporter, the importer, the consumer. You said middlemen could be part of that. I guess I just wanted to ask you, do you know of any way in which to 100% guarantee that the consumers will not have to pay higher costs when it comes to tariffs?
Not really. It's not going to be easy to identify with any accuracy exactly where costs do fall, but I think it'd be hard to guarantee any particular outcome. I think we're just going to have to see.
Great. Thank you. I yield back.
Thank you, Senator.
It's self-funded, but by the taxpayer.
Thank you, Mr. Chairman. I just want
Dude,
to make
here's
a point before we
Pocahontas.
quit here, and that is about law enforcement. If you keep the laws the same on the books, but you fire the cops, you're going to have a lot more crime. That's kind of law enforcement 101. And the problem we've got right now is law in the books about
defund the
consumer
police.
protection hasn't changed. But the cops, at least right at this moment, have been told at CFPB to stand down. And I appreciate that we have state AGs who step in, and often they partner up with the CFPB. But there is no one else for the giant banks who actually does what's called the bank examination, the supervision. And that is so important. Remember the Wells Fargo scandal, where Wells Fargo was illegally opening fake accounts in people's names? You find that through bank examination, not because the person who got cheated could figure it out. Bank of America gets hauled in because bank examiners discovered they were charging people illegally on junk fees. Nobody finds that but the people who are down in the banks doing the bank examination on behalf of the consumers. Look, we tried a patchwork of law enforcement for consumers before 2008. We had all those laws scattered among 7 different agencies, and we saw how it ended. It ended with millions of people losing their homes, millions of people losing their jobs, millions of people losing their savings. The CFPB is our law enforcement agency to make sure that the giant banks follow the rules on consumer protection. And for me, right now, I'd be really worried about doing business with a giant bank when there's no cop on the beat.
How long do you think you practiced that?
I'll recognize myself for just one question, and it'll even be relevant to your job, I promise, Mr. Chairman. So thank you for your patience and for being here. I wanted to follow up on there were some questions, or at least I know Senator Rounds asked a Basel III question, and your response was basically, let's get the people in place from the administration, and then we'll proceed again. Treasury Secretary Bessent recently said that the banking system is, I believe, said, quote, well-capitalized, perhaps over-capitalized, unquote. And given that assessment, or if you agree with it, could you discuss the necessity of advancing a new Basel III proposal, specifically how an updated regulation would impact the ability of the regional banks to compete with the big Wall Street banks, and what consideration should be taken into account to ensure that we have a competitive banking system? Because I know there's this concern comes and goes. And for those of us who have largely regional banks, or God love them, the best of all, community banks and credit unions, a competitive system is really important. So if you could just answer that, and then I'll wrap up.
Sure. So we're eager to get together with new colleagues from the FDIC, new leadership at the FDIC and the OCC, to try to finish Basel III. My own view has been that our banks are well capitalized, and Basel III was not supposed to be an exercise in raising capital in U.S. banks. Mario Draghi said that. Dan Tarullo said that back in the day.
Apple's finally turning.
I believe. So I think that's
Mag 7
right.
puke,
we
NASDAQ
have
puke,
some work to do,
SPY
but
puke.
we'll get there.
I don't see how you could be bullish right now.
In terms of your regionals, they don't face the G-SIB surcharges. They don't face quite the burden that the large banks face on resolution planning and that sort of thing. So we certainly need those banks to be healthy and profitable, because we need them to compete with the G-SIBs. We don't want a world where the G-SIBs just keep getting a bigger and bigger share of the economy. That's not what we're looking for, and that's what a lot of pressure. We've seen the number of community banks, especially, declining for 30 years.
Yes.
And this is not something we want to. We don't want to be the cause of that. If it's happening by natural causes or because of evolving technology, that's one thing. But we don't want to be inadvertently causing that to happen.
So as you look at a Basel III exercise, can you think of anything specifically that ensures that competitive, diverse banking system is maintained rather than a consolidation, whether it's fewer community banks into more regional banks, or fewer regional banks into more Wall Street banks?
Well, I just think you think twice before you impose the kinds of things that we impose on the largest banks and the next to largest banks. You want to be careful not to just think we should do exactly the same thing. It's what tends to happen is, so for smaller banks, it raises the fixed costs, is what it does, of banking, and it makes it harder to start new banks, and makes it harder for any but the largest to be successful. So that's not what we want. We want a lot of competition, and these regionals. It's important that they thrive.
I agree, and I agree with your assessment. So thank you for that. Thank you for staying with us for the day, and glad we could get you first. So as we wrap up, for senators who wish to submit questions for the hearing record, those questions are due 1 week from today, Tuesday, February 18th. Chair Powell, you have 45 days from that day to submit your response to questions for the record. Thank you. The committee stands adjourned.
Stands adjourned. Was it the easiest trading day? Absolutely not. But if you were patient, you had, it was just a perfect setup to wait for this. It really was. I called it out beforehand. I called it out during it. I don't know how to make it more obvious, but things paid very, very well. I laid out all the Edgeful situation to you, and folks, did I trade on it? You better bet I did. Right here, currently up 2.2 thousand. 2 different plays right there, called out. I gave you all the reasoning beforehand from Edgeful. Check that out. You could get it for free. Get Edgeful. It is a free trial pinned to the top of chat in the description of the video. So I traded on that today. Once again, just to show you in real time, that's been working well. Up 2,000, 2,100, not a bad day on a 40K account. I'm going to be very, very happy with that. If you're curious about how things are going in real time, things are going swimmingly in real time right here. This is why you should probably get into the Discord. These are the swing plays, currently up 19.2. I am currently looking to dump half, so we're going to see how that one goes out. I actually thought I might get lucky and be able to show you guys in real time where... It must have got super close to getting a fill. I do have a pending order roughly in this range to dump half of my position and let the other half ride. So that's working out very, very well. And then where we came, dude, rewind this stream. Where was I calling out a bounce to you? Dude, who else is calling out pivot levels the way I am? Seriously. In terms of other people actively trading real money in their real accounts, doing it beforehand. None of this Monday morning quarterbacking of oh, look what I did. In real time. I drew this out for you hours ago. Truly hours ago. I was like, okay, look at, this is the bounce zone. We vomited right into the bounce zone, came out. This is not rocket surgery. Everything we're doing here is very learnable. It's very achievable. You just have to put in the effort. You have to basically understand basic statistics that you can get from Edgeful, and you have to understand how to like read and interpret proper options flow. That's how you do it. If you know options flow and you know, I mean, dude, some of this stuff, people love to overcomplicate it. Like they truly love to overcomplicate what this is. I'm telling you, what you need to know from like a logic standpoint, from just like a math standpoint in the market, can be taught in one long weekend, one good month's worth of study. The hard thing of trading is discipline, is doing what you should know you should be doing. And that more so what I'm talking about is cutting it when you're wrong, or following the trend when you should be following the trend. That's the tough part about trading. The logic of knowing what gamma, vanna, delta, all of that, that's easy. Learning these odds, relatively simple. This 90% of the success you're going to have in trading is, are you being disciplined? And then 7% of it is, do you know what you're doing? Like the actual stats, facts, and figures of the market. And then 3% of it is pure luck. That's the combination of a successful trader. 90% discipline, 7% actual knowledge, 3% pure luck. That's what's going on. That's the breakdown. So day in and day out, just learn these levels of why people are like, how I was able to call these out. If you rewind the start of this show right now to the start, like go right back, right around market open. If you want to learn how I did the full layout for today, I explained it all at market open. I implore you to go back to that part of the video. That was definitely when things were a little bit more didactic in teaching. And right now we're kind of in no man's land. The NASDAQ bouncing a little bit, the Mag 7 bouncing a little bit, the SPY bouncing a bit more. I do think it gets faded. The 5-minute trying to save itself from breakdown. Same with the 10-minute, same with the 30-minute. 5-minute breaking down on the NASDAQ, 10-minute breaking down, 30-minute breaking down. We had a moment of hope to survive, and it seems like it is quickly being taken away. If this options flow turns back south, I think it's game over, and we'll just once again be testing the intraday low, the low from yesterday. But I do want to clarify, the odds are extraordinarily high that we close out today below 6066. And they are not as high, but they're still pretty good that we close out the day below 6,044. So if you want to know how I got those odds, like I said, rewind to 9:30 this morning. That's when I started explaining that. But check out what's pinned to the top of chat in the description of the video. That's where you could get the free link. And that's exactly what I was using to give you guys this full breakdown of what in the world I saw going on today. And obviously it paid nicely. Just to show you this, I made 30,000 here on all the Apex accounts, and then on some take profit eval accounts, I made 1.5K on each. So that's another 7.5. So 30 plus 7, 37.5 locked in on futures. And then right now, obviously, I'm still currently in this Tesla position, which I was attempting to dump half. It must be reverting a little bit, but I'm so comfortable. I have plenty of time. I'm not out. I've literally the rest of this month, so I'm not too worried, but sitting nice on a nice 20K right there. Any hoozles, that's what I have for you. Here's the plan. I'll be posting an update video tonight about everything that happened in the market and how to prepare yourself in the overnight for tomorrow. I implore you to watch those videos. I'll do even another teaching session here if you guys are enjoying those. So check that video out tonight. And then tomorrow, not only is Powell streaming or going to be talking with the House, and I'll be streaming that. That's at 10 a.m., a half hour into the market. But we actually have to start early tomorrow because we get the CPI inflation report coming out at 8:30. So tomorrow's a very big day. We get an inflation report and another Powell testimony in front of the House. So tomorrow's going to be a very, very, very big day. That's what I have for you right now. Shout out to Rumble Premium. Shout out to Edgeful. Shout out to the Goonie Community. You guys are absolutely fucking awesome. That's what I have for you right now. I'll catch you in the update video. I hope you make a bunch of tendies today. Respect your levels, respect your risk, stick to your trading plan, and you will crush it. With that being said, peace.